Hey guys.
Good day, everyone. Richard
How
here
is
from
this
Motor
now?
Prime.
Can you hear me
How's it
better?
going, Lara? Walter?
Hi.
You're live. How are you doing?
All good. How are you doing?
Good. I think Walter's still having a few issues there. I'm good, thank you.
Good.
To all of you, hello from my side, from our
Is it
side.
just me, or are you guys really glitching right
Yeah,
now?
we just started, Walter.
Hello?
Yeah, your visuals is fine. I think it's just the voice, a little bit. Right, so we got a few tech issues
Hello,
by
guys.
the sounds of things. Walter, that's better. Can you hear us?
Can you hear us, Walter?
Hey, Richard, can you hear me?
Yes,
Yeah.
100%. Can you hear us? All right, guys, while Walter's sorting that out, I think we'll get the show on the road here. We do, obviously, everyone's sitting in different areas in the world, so we will have from time to time some issues. So from my side, normally I get busy around about market open. So that is the cash session. So that's in still about 15 minutes. Walter, are you with us now? Can you hear me now?
Yeah, I can hear you clearly. Can you hear me now?
Nonsense. Welcome.
Are you good?
Yeah.
All good.
All good. Nice to see you,
All right.
Walter.
Guys, so let's get the show on the road.
Can you guys hear
Walter,
me?
do you want me to start off, or do you ready to take the reins
Hello?
there?
I don't mind kicking off, Richard.
Lara? Awesome.
Yeah,
Then do it.
yeah, that's fine. Yeah. All right. Let me just present my screen. Okay, so can you see that okay?
I'm just adding, there we go, 100%.
All right.
Perfect.
Yeah, so today I was just going to kick off by talking about German 40, the DAX index, and then just covering just a few Forex pairs that I'm looking at, want to see what happens this week, pairs that are in good area for institutional activity, and just see what happens kind of later on as the week goes on. But kicking off with DAX. Okay, so this is the weekly chart. So DAX is the German 40. It's the top 40 companies in Germany, as most of you probably know, although I know it's not that frequently traded by many. It's really fast moving index, and it's great for sort of scalping. It's also really nice for holding longer term positions. It's got a few sort of characteristics. It's a really nice one to trade, but it doesn't tend to react too much to earnings like some of the US indices do. Like I know, Dow Jones, for example, if Amazon earnings or Boeing earnings come out, the reaction is super quick and super solid. DAX tends to just kind of follow more so on what those are doing, but you get nice movement in the London session. And if it's in the right sort of cycle as part of the, price cycle, then you can get some really lovely trades that will kick off in London session and then continue through the New York session. I'm just going to take that off just for a minute so that we can see. So just looking at, this was obviously the all-time highs right before the tariff dump. And we saw that massive dump down, as they all did, and then a huge rally there and a continuation up. So looking at this sort of on slightly lower timeframes, what we had was we got a huge push up, which left a gap up there, and then a new all-time high that happened last Monday. And then I'm just going to put my drawings back on. And then we saw this push down throughout the week into this weekly fair value gap area, which took out liquidity on this spike here. and then also bounced off the EMA 50, the EMA 50 on the 4-hour. So on Friday, we saw the bounce. On Thursday, we saw the bounce off of this area and had lovely series of engulfing candles up here, bullish candles back up. One of the indicators or sort of ranges that I like to use on DAX because it respects it so well is the session volume profile. So the area where most trading happened the previous day. So what I saw was this huge pushback up, and then these yellow lines indicate the value area from the prior day. So we saw by this candle on the 1 hour that we got an acceptance of value area, meaning that most times, about 80% of the time, if value area is accepted, price will rotate through to the other side. So I felt reasonably confident just because of the push back down to this fair value gap level, and then the reaction that we had, and then price continuing on, pushing up through the value area. Took along here, and it ran all the way through, went straight through the point of control and exited the other side of the value area. So the value area high, and we had this lovely price action that continued on into Friday. And I like to look at candle range theory because that was a massive spike down there. This level here represents the 75% of that spike. Often price reacts to it in the same way as it reacts to gaps, and price carried on all the way up exactly to that 75% level and then did a retrace. So that was really nice. And this week, just looking to see, there should be some kind of, we've already seen some kind of a pullback. This week opened with a gap down. And I like to look at the midpoint of the gap down, which is marked out by this blue line, the new week opening gap. And price often does respect that line. And also it took out this little bit of liquidity here. So to see over the next coming days, I mean, Monday is usually a quiet day on DAX. The best days to trade DAX are Tuesday and Thursday. So we can see what price will do over the next couple of days, see if we get a deeper pullback and possibly a continuation. It might come back down to this value area high level again. It still kind of hasn't done a particularly deep retracement, so we'll just see what develops. But could be nice for a continuation or monitoring price action sort of down here, actually, depending on how low if it comes back into that value area, it might take out the point of control and then continue higher, or we'll just watch for price action. But yeah, DAX is at all-time highs, and super interesting one to watch. So it's a nice one if you do like to trade London. And as I say, because it's so fast moving, and it's usually pretty clean, actually. Setups on DAX are nice and clean as well, so works quite well.
Yeah, it can be quite a beast. I used to trade the DAX 2014, 15, 2016. I don't know why I haven't touched it again, because, but yeah, that's almost like the NASDAQ of the European world, because it runs, and it's what's the tick value on the future side is also quite big. I think it's $12.50 or something. The tick. And it can move, so you have to be on the right side of that. That's for sure.
Yes, that's for sure. I think it's. I mean, I kind of began my trading journey on DAX. I mean, I don't know, I was a glutton for punishment, but I actually really enjoy trading DAX. Yeah. It's one of those where you kind of know pretty quick if you've got it wrong.
Yeah, that's probably why.
Yeah, you don't have to hang around. Yeah, it doesn't hang around. It does move super, super fast. You know, but you're right. Obviously, you know, it's kind of like it tends to follow similar patterns to the S&P and to the NAS. But you know, if you're looking for something to trade, an index to trade in the London session, and as I say, it does often follow through if it's in the right part of the cycle. But it's a nice one to look at. It's a good one to look at for something else, you know, to think about. Yeah. So just gonna quickly cover Eurodollar again.
Okay. So just not to interrupt. Can you guys hear me clearly now? Are we good?
Yes, 100%.
Awesome.
Are you good? Yeah.
Amazing. Sorry about the interruptions at the start. Sorry, Lara, carry on.
So we had this kind of 3-month kind of 3 level of push over the 3 months, as we discussed last time, but also just to recap on that, price has pushed back in 3 levels up to this really nice institutional level, which is an area where price kind of put in some serious bearish action in the past. So coming back up here, taking out this liquidity. And then we've seen a couple of really nice bearish candles to show intent to the downside. So euro dollar is looking obviously pretty short. We've had a run up here this morning or overnight just to kind of come up to this level here and take out some of this liquidity. Obviously, it's only Monday, so I do like to kind of look at the week opening range, see kind of, you know, what the high and the low of that week is put in, and being mindful that Tuesday can kind of extend the high or the low, and price potentially reacting to that throughout the rest of the week. But we've got this 4-hour evening star that's just been created this morning. Again, it's come up into this kind of wick of this 4 hours. So we just have to monitor this over the next kind of couple of days to see what the intention is. But obviously, they're short bias on that. And then very quickly on pound again, again, in a really nice position to take higher time frame shorts, and then possibly also to have that kind of bias for the foreseeable few weeks, depending on what happens up here. Again, this is a really nice institutional level on the weekly, where we've seen prior strong bearish price action. Pound kind of, they put in slightly, the UK put in slightly stronger than expected GDP results last week. And then the dollar, the inflation was kind of lower than expected. So we haven't really seen anything yet to kind of, for me, the fundamentals trade in the higher time frame just add validity to the kind of longer view. And I like to kind of track those. So we'll see, but given that price action there, this rally this morning is not really a surprise. There is data coming out this week, pound data. I think that's CPI, and then we've got retail sales and some other data on the US side later in the week. I mean, just looking at the sort of the discrepancy between the euro dollar and pound dollar, we can see there's more evident weakness on euro dollar than pound dollar right now. But that's no surprise when we look at euro against the pound, how much weaker euro has been against the pound. So we can see this pair, euro pound, just coming into this, again, really kind of institutional level. So we're just going to see how price reacts at that level, see what data comes out to hopefully validate shorts on GU. Other pairs that I'm looking at for this week, and again, depending on the data, again, always, I like to look at, good areas, sell areas. Obviously, we've had this massive drop. That was last summer. I expect everybody remembered that one. And then we've had on euro yen, we've had this kind of, again, 3 sort of push pattern over the course of the last few months, which takes it right back up to this kind of high value area. It's taking out this liquidity here, and has come quite deep up there. So that's quite a good indication. And then we've had this drop here. For me to kind of want to sort of take a short from this position now, I'd want it to come a little bit deeper into this range. We've got a big fair value gap area there with a kind of a nice little kind of hook point area there, which sort of lines up with the 50% fib. We've got inflation data coming out from Japan on Friday. I think inflation is looking like it's kind of going to be higher, which would indicate possibly they're going to raise interest rates, which would lend validity to a euro yen short. And then the same kind of thing here on pound yen. So just kind of monitoring these two to see kind of what happens. We've had this nice push down from this higher time frame area of institutional activity, and then kind of reach down here into this fair value gap, and now starting to push back up. So I'll just be monitoring those, to be honest. It would be great to see the data lining up on Friday. I think that's coming out early in Asia time on Friday. So if the data sort of adds validity to the short, then that's going to be something to look at. So those are the four kind of areas the four Forex pairs that I'm looking at for the week. And then, as I mentioned, DAX, see what happens for a continuation. If we get that for the long, for a nice trend trade, hopefully on the higher time frame. But we'll need to see price action validate that.
Cool stuff.
And that's me. That's kind of what I'm looking at. I like to look at the one or two indices, and then the few Forex pairs, because, as I mentioned, but I like to trade the higher time frames, and then kind of just try and trail down for those.
Awesome.
So that's me done. Yeah.
Lara.
No worries.
Walter, you want to show your charts?
Absolutely. Thanks a lot for sharing that.
That's okay.
All right, give us 2 ticks. I'm just going to share my screen now. So there's actually a trade I'm about to take. So it's a good timing.
Exciting.
That's great timing.
How is the audio quality, guys? Good?
100%.
Very
Do you have
good.
a new
Awesome.
setup there, or I don't recognize the
I got a
background?
new-
Are you traveling again?
I got a new... No. This is my home office. My table used to be against the wall. I turn it around. I like to move things around every other month,
Change it up.
because I get bored.
Your feng shui.
Yeah.
Exactly, feng shui. It really is a thing. It really is. Sorry, guys. All right,
Absolutely.
I'm sharing my screen now. All right, so what we're looking at today, of course, I'm starting with gold. Is very simple. I'm actually looking to take a long trade right now. So I'll just take the trade first, and then I'll walk through sort of like the rationale behind the trade. So just pull up my Holoprime account. So what I'll do, sorry, 1 second. Let's just get rid of this. So the general idea right now is that I am long on gold. Okay, so I'm looking to buy. So right now I'm going to be placing a pending order, as I always go with a pending order. Well, I'm going to go with a market order right now, because price is basically in my area of interest. Stop loss goes below the low, and then my take profit target will go. So I'll show you guys on the 4 hour where I'm looking at. So I'm anticipating market to essentially trade all the way up here to close the gap from last week. So that's around a 1 to 4 R to R, taking a 1% risk on this trade. And I'm just going to execute that right now. Oops, I need to turn on, sorry, I just need to sort this setting out. Come on, and then allow. There we go. Now that's going to let me place that trade. Maybe not. Okay, now that's going to let me place that trade. There we go. So now we're in that. Oh, what's happened there? Okay, so this is the account I was given. So I'm just seeing what's going on here.
I'm also using a different platform today, and it can be quite tricky to get used to a platform that you're not used to.
No, it's okay. No, I'm an MT4. I'm an MT4, MT5 guy. So this is my kind of platform. Yeah. Yeah, I'll get back to that in a second. So this is the general idea of the trade. So right now I'm anticipating a long. However, obviously what we saw this morning was the market opened a massive bullish candle. So there's a massive gap in the markets during the market open. And then so during the Asian session, the market came down to closing on that gap. And then after that, we saw a break of structure to the upside. So this is the initial expansion on the 30 minutes. And then we have the secondary expansion right here. Okay. So now at this point, of course, bullish is, I'm anticipating one more leg. Area of interest is very simply this bullish order block. So a very simple setup. So this is a very classic trade that I take all the time, is a long from there, stop goes below the low, and I'm looking to take my profit. So again, this is the last week's gap that's at the start of the week, right? So at some point the market will come to close in on this gap. So TP1 could be obviously this initial high, and then TP2 could be this high. That's one way of doing the setup. But the way that I executed my trade was I put my stop loss below the low, below the actual low that was created in Asia, right? And then entry still in the same place. And then I was simply aiming for the close of this gap. Now it's a lower R to R of a 1 to 3, but for me, this is a safer setup. The reason it's safer is because there is a good chance that we could see the market take out this short-term low on the 30 minutes, and then after we could see a swing to the upside. So I think it's more likely the market will take out this short-term low than it will take out the lower low. So it's very important to sort of like anticipate that rather than just placing your stop loss at the most recent low. I prefer to go at the low of the range. And then on the 15 minutes time frame, there is a confluence. So the kind of confluence I'm looking at is like this. So in London session, I actually was looking to go long in this, but I actually missed this trade because I essentially was anticipating exactly the same structure. So it was a break of structure to the upside. After that break of structure, I essentially anticipated the market to retest this high. But the market came down, but it failed to trigger my pending order at this high, right? So that's why I wasn't able to get in on this long in the London session. But I was anticipating the market to come back in New York because, of course, the 800 EMA was within proximity. I was anticipating some sort of reaction off that 800 EMA. Why? Because 800 EMA acts as an area of dynamic support and resistance for price. Don't ask me why, something I've noticed for years. And therefore, I've sort of like incorporated it into my trading plan. So the first, second, and the third expansion took place. So we had a full bullish cycle on the 15 minutes time frame, right? And now, obviously, what we're looking at is a reversal of this bullish cycle. Right now, it's important to notice this because, again, when the market is reversing on the 15 minutes time frame, but it's reversing into a 30 minutes area of interest, such as a 30 minutes bullish order block, that usually is a very, very strong indication to trade in line with the 30 minutes time frame. Because then when we look at the 1 hour time frame, yes, right now price looks a little bit messy on gold, but again, we have a very clear break of structure to the upside. So I have a very clear bullish cycle to the upside. The market gave a bearish reversal, and it gave a new break of structure to the upside, with this being the initial high, and then it gave the break right there. The market has accumulated, retested at 800 EMA. Again, that dynamic area of support and resistance for price, retested at 800 EMA in London session, and now we're seeing what it looks like the beginning of a continuation. So I'm 100%, like 99% positive when price breaks outside of this range, it will be a very fast run because there's very little resistance above this high, right? The next area of like some sort of like major liquidity pool is going to be this imbalance and the high of last week. Okay, so so that's the setup I'm looking at. I want to share something on Bitcoin, but I just want to sort out my MT5 on my end. So if you don't mind, I'm just gonna hand it over to yourself. And then I'll let you know when I'm ready, Richard, to talk about Bitcoin.
Yeah, I'll be relatively quick on my side, and then just let me know when you're ready. Now we can switch back again.
I will do. Just need about 5 minutes, okay?
Sure.
If I miss this trade, I will be bummed out. So because when I missed the London entry, and I was like, okay, it's gonna come back in New York, and I'm gonna get it in New York. So now it's actually back. I will not miss it under any conditions. I will not miss it.
Well, fingers crossed. All right, guys. As always, I'm going to be looking at the S&P 500, the NASDAQ, as well as WTI crude. Looking for a morning liquidity sweep potentially. Thus far, not looking like we're going to get that. Apparently, there's been a downgrade by the S&P over the weekend. We already had a bit of a slight reaction during Sunday's open. But sorry, guys, I'm also using a new platform here, so I'm going to try my best to navigate this properly. But since Friday, we've actually finally started seeing some weaknesses here in the indices, and that's for the S&P 500 as well as the NASDAQ. So what is it I'm looking for in a potential opportunity? Well, I would like to see price take out previous highs or lows. In this case, we can already see that price took out the pre-market high, which was around about 5,909, give or take. And we're now hovering around about these lower highs over here. So any sort of weakness that we could potentially get now with a reversal lower might be indication that what I would think is the near-term trend is bearish. So I would like to see at the current levels. Oh no, you see now I'm messing around here with this platform now. Hang on 1 second. Let me just get my cursor back here. So if price can take out these lower highs or this lower high over here, and then we see weakness to the downside, that might be a potential entry on the S&P 500. NASDAQ, same thing, very strong open to the upside. This block I have over here is another strategy that I call, it's actually a very famous strategy called the opening range breakout. So you wait for the first 15 minutes, starting at 9:30 when a cash session starts, till the 9:45-minute mark. And then you see if price breaks out on a 5-minute above or below the opening range, that could potentially be the direction that price might be heading into the lunch sort of time frame or midday time frame. Sorry, guys, I'm just trying to navigate this properly. There we go. Price already took out pre-market high, similar to what the ES have done, that high being at 21,221. The lower end pre-market low was at 21,047. So again, with this strategy, I like to see price take out a high or low. If it doesn't take or continues higher, I'll have to zoom out a little bit and look at where the previous days or last week's important highs and lows were. In this case, could be lower highs like this one over here, and that would be around about the 21,352 level. Pretty far away to the upside here on NASDAQ. So trying to get a trade today. We're getting nice movement out here, but considering that we've seen some weakness finally, I think it'd be nice to take a short. Whether the market's actually going to do that or not, we'll have to react accordingly and trade what I see, right? So, but my bias expectations is that we could potentially see a bit more weakness. Whether that happens today or during this week remains to be seen. Then crude oil. Yeah, I just want to zoom out properly. Been very weak last week, coming to a low here on the 15th, and then I'm going to get that pencil out one more try here. This currently looks to me like a potential ABCX, and an incomplete ABC still on the way, meaning that I'm viewing whatever that's happening over here as a bearish correction. So ideally, I would like to see price take out this previous high here, which is around about the 62 level. I think that occurred on Thursday last week, and then see some weakness downwards. Alternatively, I might be just seeing things that's not really there, but price already took over these clusters of lower highs that formed during the pre-market session, and it's very close to these highs that opened or were created after Sunday's open. So if we can see a move upwards here, I still expect more upside from where we are. Potentially just seeing a 1, a 2, maybe an ABC, maybe a triangle, another move higher within my time window from 9 to 11. If I see weakness and a decline to the downside, break of structure, then I'll switch to the 1-minute time frame, see if I can time an entry. I like to get in at fair value gaps and use them as my trade entry locations. So that's pretty much it on my side. I'll monitor things for potential trading opportunities, but judging by how the NASDAQ and the S&P 500 is moving upwards now, there's been no sign of weakness here at all. So crude oil might be the one that piques my interest in a while. So let's see. Walter, you ready to show yours?
I just need about 5 minutes and I'll be ready.
You want more? Okay, cool. And to all our viewers, guys, please ask questions you have. I'd be more than happy to help you guys out with that. How are we doing on time? So 45 minutes just passed.
I mean, Lara, can you see me? Can you guys still see me, by the way?
Yeah.
Yeah.
Awesome. You.
You've frozen a bit though.
Yeah, I feel like that's the case. But I mean, when it comes to
Oh,
there he goes again.
he's gone. There's so much of trading is a waiting game, isn't it, Richard? It's just having the patience and the discipline to just sit and wait for the setup.
Yeah.
Sit on your hands.
Yeah, as a trading psychologist, because I mean, do you do that primarily, or I know you're a trading or performance coach here at Hola Prime now.
Yeah.
But did you actually apply? You got a psychology.
Yeah. My background is psychology. Yeah.
Psychology, but specifically in trading, when did you start gaining interest in that?
Well, trading quite a few years ago. First time round was a very long time ago, a couple decades ago. But it was a little bit harder to sort of. I mean, it's hard. It's hard anyway, but 20 years ago it was super hard because there weren't the resources and there weren't, everything. And also, it was a time in my life probably not really ideal for kind of like taking that on. So I dropped it. But yeah, about 3.5 years ago, I decided, right, the time is now. I can't even really remember what it was that sort of kicked me back into the trading sort of sphere, really. But I've always had kind of an interest in the sort of economy side of things and financial stuff, and I just like to sort of punish myself, really. That's what it is.
Is it punish yourself or challenge yourself? Which one?
Yeah, well, it's both, isn't it?
Yeah.
I think challenging ourselves is always really important. I was speaking with Paul on Friday about the benefits that our brains get from when we push ourselves to new challenges, and we're talking a little bit about lifelong learning and sort of always like taking on new challenges to kind of keep the brain cells fresh and moving. Yeah. So I guess that's what happened for me. Prior to that, no, it was specifically psychology in terms of like doing coaching around that, and also kind of in a psychological support role actually for a lot of people with different kind of things. But a lot of that definitely spills over, sort of anxiety and kind of, how to manage yourself when you're activated, when you're adrenalized. And the charts, they do that, don't they? They do that to people. So that's kind of how that sort of overlap came about, really. Yeah, super interesting. And just understanding what happens to people's brain chemistry when they're kind of A, learning, and B, kind of just trying to get to that point of consistency.
Yeah. How
the sort of, the dopamine kicks in, the role of the cortisol, and just kind of help people to understand how to manage themselves through that. So yeah, that kind of came more towards the end of the psychology side. But yes, always super interesting.
Interesting. Yeah.
Yeah.
Or maybe I'll have to book a session with you soon.
Oh, wow. After years, Richard, I'm sure you've got the psychology down, haven't you?
I'm very much more chill than back in the days when I started, that's for sure.
Exactly that. Yeah. And I think that's a prerequisite, actually, is to get to that point.
Big time. But you're right. Patience, very, very important.
Patience.
Trading with a plan, trusting that plan.
Yeah.
It seems like the markets, tend to reward those that are patient, right? If you just jump into things willy-nilly, or with an ego especially, you get punished very quickly.
Oh, the ego, it kills good traders. Oh, yeah. And, I think that's the problem, isn't it? But it's such a powerful part of who we are as human beings, that ego, because it's how we define who we are. It's what, you know, it's what tells us what we want to achieve. And so it's always talking to us. But when it's whispering to you in front of the charts, you've got to learn to just master it really and ignore it, because that can just really your consistency. So yeah, sitting on your hands until it's ready.
Yeah.
I mean, it's easier said than done, right? I mean, what do you think is some of like the key things that a trader needs to have before they can sit on their hands?
Yeah.
Sorry, what was that, Walter?
I said, what are some of the key things that a trader needs to already have in place before they're able to sit on their hands? Because it's easy to say to someone, sit on your hands and wait for the right trade to come along.
Yeah.
But there are like practical steps that a trader could take, for example, in order to make the whole sitting on your hand process a lot more easier for them.
Yeah, I mean, obviously you've sort of got to have an edge, haven't you? So that's your first thing. You've got to know that you're trying to trade a strategy which is that has that edge. I mean, that in itself is a challenge for a lot of people, because people are prone to perfectionism. And so, you know, somebody who aspires to be a trader, they're putting in a lot of work. It's quite an adjustment to their psyche to take losses. And so that in itself is a lesson and a kind of something that people have to internalize. So, but anyway, understanding you have an edge, and that all comes through the sort of the back testing and your forward testing, everything like that, all your data that you've gathered. And then once you know you've got that, that's kind of like the cognitive side of it. That's understanding that you have a plan. But then it's knowing that you have that plan, and then learning about your own brain chemistry really, and understanding what is actually happening in the moment. Because people who are self-aware and understand when they become adrenalized, like, so when they're kind of their fears come in, or their fears of kind of missing out, a big old FOMO, or fear of ending the day on a loss or ending the week on a loss, if they can understand that that's a normal process that the brain is kind of putting them through, that's when you can say, okay, I understand that's happening to me right now. I'm experiencing that, and I'm going to try and harness that. But it's understanding that it's a normal process in the first place, and then saying, I know why that's there. It's part of my survival instinct. It's there to develop me as a human. It's there for all these reasons of kind of what my goals are, understanding who I am, what makes me different to other people in society. So that's the role of the ego. But actually in trading, it doesn't really have a place. We have to understand that it's going to rear its ugly head from time to time, and we just have to know when that's likely to happen and what we're going to do about it. So I really like pre-trading routines of like visualization. Even I was mentioning to Paul last week how the spoken word is processed differently in the brain compared with the written word, which is why we hear people talk about affirmations and sort of mantras, things like that. When we speak something out loud.
Do you think affirmations are effective as especially like before trading, like saying stuff like, I stick to my trading plan, I'm a consistently profitable trader? Do you think that that's something that can help traders to also like improve the ability?
Absolutely. Yeah,
definitely.
Yeah, I do. And I've seen it in all walks of life, where people go from saying something that they don't actually believe, but doing it anyway, and kind of going through that process. It sounds a bit trite, but that sort of fake it till you make it. But the more you say something, the more your brain just over time accepts that as the case. Because our brains are always looking for ways to not have to do work, because they get so overloaded that they'll do the shortcut thing. You know, it's like when you get in your car and you go down a familiar road and suddenly you're veering off, but actually that's not the way you're going. That's your brain trying to kind of release resources. And it's like the same thing. So when you keep saying something, it becomes fact over time. And then you've just got to kind of work with that. Affirmations absolutely work. And as I say, the spoken word lands differently in the brain. Like if we say something out loud, we're 100 times more likely to remember it compared with if we just write it down or think it. So yeah, it's really, really powerful because it begins to be processed as information that your brain then just kind of offers back to you as fact. So yeah, I do visualization as well. So like FOMO and over trading, kind of visualize yourself what you're going to do in that moment instead of kind of jumping in, walking away, resetting. And then there are other practical things that you can do to kind of lower the adrenaline and rebalance yourself.
Yeah, visualization is definitely like it's helped me a lot over the years.
Yeah.
Like what I like part of my, I mean, I don't do it as frequently as I did in my early days, but like a big part of my pre-trading routine was like I would play Gladiator soundtrack in the background. You know, I don't know if you know the one I'm talking about, but it's like very sort of that focused sort of music. And then I just like close my eyes and I just like smile and I just imagine myself just in front of my computer going through my trading procedure, following my trading plan, and how good it makes me feel to just stick to my plan. And I even like sometimes imagine like taking a loss and still feeling good because it was all my trading plan. And I think like that, like even though I don't do it as much these days, I feel like doing that in my early days in trading helped me to set the right discipline and approach to my, my trading style.
Yeah. And it gets you into the right mindset because it can be a very adrenalizing thing to get in front of a chart and the candles are moving super fast. And then, you know, the bells around the corner and everything kicks off and all of a sudden your heart can be racing and that kind of thing. So getting yourself in the right mindset is super important. There's one trader, I can't remember his name off the top of my head, but he does a visualization routine before every single trading session. And the way he uses it is that he visualizes taking a loss. Like, so when you put your risk on, you accept that risk, but you're not just going through the motions of putting your risk on. You have to, or it's helpful to visualize yourself taking that loss and being okay with that. And the more that you do that, it's kind of like calluses for the mind, you know, the whole Goggins kind of, you're callousing your mind to kind of, you're getting yourself used to what that would feel like and being okay with that and accepting that in advance so that if that does happen, you're much less likely to kind of crumble if that were to when that does happen or if that does happen. So it's just kind of like preparing yourself psychologically for the risk that you say that you're prepared to take. I mean, that's the thing, you put your stop loss on, you put that risk out there, but you got to understand for yourself whether you are actually genuinely prepared to take that loss. And if you're not, then that's when you're much more likely to come back in with FOMO and kind of do crazy things that are not part of your plan. But visualization is really powerful because our brains work in pictures. So
it does. But everyone's brain is different, like you think. So like some brains are more auditory than others. So like some people think their thoughts more, whereas some brains are more visual than others. So others, they visualize their thoughts more than they think it. And some are more like kinesthetic, so they focus more on the feeling side of things when they think about stuff. So then you think like we identify strength in how we cognitize information, and then we place that strength in how we build certain like habits.
I think you're right. Some people are more auditory. Some people are more kind of like their brains are more kind of towards sense and smell. But actually, most people, when you recall a situation or when you recall an event, you're recalling that in an image, and that's why that's so powerful. Visualization is super, super powerful, and there's a lot of evidence now which talks about how if you imagine something versus actually doing it, your brain actually doesn't know the difference. And that's why performance athletes use visualization and that kind of thing. So you're kind of preparing yourself, conditioning your brain for that outcome as though it's just already happened. So you can kind of get your physiology and your body chemistry ready for that example. And they use that a lot now with high performance athletes. So yeah, it's all fascinating stuff, but there's a big place for it in trading.
Oh yeah, 100%. I think sometimes people sleep on it too much.
Yeah,
I used to do a lot of open water swimming. So
that's
I don't know if you guys know, but I actually have a world record. I swam around Mallorca in 2014.
Yeah, you?
360
Wow.
kilometers, but doing stage
Wow.
swims of 20 Ks a day.
That's amazing, Richie.
And that's the only thing that actually got me through there was visualization. You
Yeah.
visualize every single morning,
Yeah.
you know, things are going to go well. Yes, you know, you're going to be in lots of pain. Yes, there's going to be jellyfish. Yes, you're going to get stung. Yes, you're going to get tired. Yes, you're going to get hungry. Yes, you're going to get diarrhea. Yes, you're going to have this. Yes, you're going to do that.
Yeah.
But, you know, you have that end of the day. And the big thing was actually walking out onto that beach where I actually started from. But 21 days later was the actual visualization of how you would feel, because I think visualization is very important, but you have to put the feeling aspect with it as well.
You do.
So that sort of like, you know, turbocharges the actual the from it potentially happening, and it's almost like you're creating that reality.
Absolutely.
If that makes sense.
Yeah.
Same thing with trading.
Yeah.
I'm a firm believer that if you don't feel well, don't trade.
Yeah.
You know, walk away. If there's issues, personal issues, whatever the case might be, walk away.
Yeah, because you're not calibrated, are you? You're activated, and it does. It just affects everything. It affects all your decision making.
Yeah.
So, but the swimming's amazing as well. Sorry.
Yeah, I haven't swum since.
Oh, did I finish you off?
I swam too much that. Yeah, it was insane. It was quite a
that is
quite a challenge. I trained for 2 years to do that. It was insane. 7 days a week nearly.
Wow, that's amazing though.
Yeah. Anyway, just a little bit of backstory there, but definitely when it comes to visualization, 100% agree. It's a very powerful tool to use.
Yeah.
Walter, did you fix your platform now? What's going on?
Yes, I'm all good. So I've actually, so I'm going to share my screen now.
Are you going to take it?
I've already taken it.
Okay. Do you want to switch?
Yes. Let's go. Okay.
Are you sharing there, Walter?
Yeah, I'm sharing now.
No, there it comes now. Took a little while, but anyway, nice.
Beautiful. So I mean, it's the same sort of idea with regards to this trade. I took a market entry on this account purely because at the time I tried to use my EA. So I use this EA to like calculate my risk and whatever, but I don't think this account allows me to execute with it. So it's just a calculator. Like I put my lines in place and it tells me sort of like what lot size I should trade. And I basically just like aligned along with that based on that set risk. So I'm in a trade now. It's, I entered right there, stop losses right below the low on the 15 minutes time frame. So right below that low, the low of Asia. And the take profit target is, so if we go into the H4, it's at the close of this last week's gap. Okay. Again, there's no guarantee that the market will close the gap tonight. There is a good possibility that the market could just take out, for example, this high within the next few hours. So the high of like 3,290. And then we could see the price hold its level, and then tomorrow, like trading session, is where we could see that sort of like continuation. So a trade like this, like I'm happy to, if it runs the way that I imagine it will run, and let's say that by the end of tonight it trades into this area, then I'll just take partial profit, and I'm happy to hold something like this into tomorrow. Okay. So that's the goal. So again, we'll see how this plays out. Again, there's no guarantees. This could completely move the opposite direction. Now, as for Bitcoin, so Bitcoin is interesting because this morning when I woke up, I saw price rally like crazy.
Obviously, it gave this big pushes. It started rallying basically on Sunday morning, and then like going into like Sunday afternoon, there was that continuation. And the New York session was well, not New York, because obviously markets are closed, but on Sunday morning New York time, the market sort of like came back down, gave a sharp correction before like the end of the day began to rally again. And then Asia open, we saw that big push into the high. So if we take a look on the higher time frame, we can see sort of like where price had taken out. So there's quite a few liquidity targets and liquidity pool, but we can see that the market took out this short-term high, right? So this was the short-term high that the market took out during Asia today. There is this relative equal high up here, and there's obviously the all-time high at 100. So right now, it looks like price is really teasing the market, because obviously, like this move, you could easily have thought, oh, this is the move. This is the move that will go into all-time high. But immediately after that, we saw a sharp decline to the downside, and then the market broke back down. And I do see a good possibility. So right now, there's two areas of liquidity I have my eyes on. The first is, of course, this relative equal highs, which is the red line, which is the one I highlighted on the high time frame. And the second one are these relative equal lows down here. So the way that I potentially see things projecting with Bitcoin is that price could simply trade in to take out these relative equal lows, right? So that could be the first move. And then after price takes out the low, we could see the market then rally towards the all-time high, right? So, and then this rally could be the rally that we could see Bitcoin, rally for a period of time. Who knows, right? Or you could simply like take out the all-time high, trade back into the range, and we could see Bitcoin decline for the rest of the year. Okay, but right now there is a lot of institutional capital in Bitcoin accumulating, especially over this past few weeks. We've seen some serious moves by big VCs, as well as big hedge funds, buying ETFs on Bitcoin, and even countries even building some sort of a reserve on Bitcoin as well. So this is not really something that I see, like, even if we do see some sort of like a bearish market, I do not see it being bearish like below 80K, for example. Like there's just so much liquidity holding price up in this range that if it were to give a bullish break to the upside, that bullish break could be bullish for some time, basically. So so right now what I'm looking at with Bitcoin, again, just going with the cycles, right? So on the 15 minutes time frame, we've seen that the market has delivered a full bearish cycle to the downside, right? So 1, 2, 3, and then it gave sort of, sorry, this is meant to be the accelerated run to the downside, and then thereafter the market gave a lower low, traded back into the range, given that initial expansion, right? And then thereafter, what we're now looking at here is 1 second. Right, and then what we're looking at here is the market broke structure to the upside. And then after breaking structure, the market came back down, retested this low, okay? And now that the market has retested the low, what's the next logical move? Well, in my opinion, or in my view, the next logical move for price is obviously for it to give a bullish continuation, which it's now doing. So if there is going to be a setup in Bitcoin for me, let's say today, what I do want to see on the 30 minutes time frame is I do want to see a new high form. So I want to see a swing high, so high, a higher high, and a lower high form. Once that happens, my area of interest is going to be this bullish order block. So I will then anticipate the market to retest this bullish order block, and thereafter to give a bullish continuation to the upside. So this is like the kind of like the sequence of events that I will anticipate Bitcoin taking if it were to obviously give that sort of swing high within the next hour, right? And if we take a look at this on the 15 minutes time frame, just to see, okay, how aligned is our line is a 15-minute cycle with the 30 minutes. Well, the 30 minutes for me, on the other hand, is indicating something slightly different, because we've seen that first initial low. The market gave a secondary low down here, and then trapped below this initial low before coming down again. So if I extend this line, we can see that the market came down again, but it trapped below the low and it closed back into the range. So again, there isn't really any sort of like sign that the market has delivered a third leg. And also there is that 800 EMA just hanging right below price, right below these equal lows. So for me, this looks like if the market were to give a move to the downside, it probably would be a very sharp drop into these equal lows, this 800. And then that liquidity grab could be what triggers the bullish move to the all-time high. So 15 minutes is still showing bearishness, but no, so 30 minutes is still showing bearishness, but the 15 minutes is showing bullishness. So this picture is going to be very similar to the picture that I see being painted on gold, where the 30 minutes is indicating bullishness, but the 15 minutes is indicating bearishness, which is a reversal move. So obviously this reversal move is trading into, so again, it's two areas of liquidity. There was this order block, there was this unmitigated zone where I had my initial pending order in London. So now prices come down to mitigate against it, right? So if price doesn't react here, if it keeps getting lower, then it's going to be a very interesting move, right? A very, very stubborn move. But I do want to see some sort of a reaction here. I do want to see some sort of like price action to break above these highs and above the 800 EMA. Usually, like when the market does make that move, it typically can be very, very aggressive. So it'll be very interesting to see if the market will give that sort of like aggressive shift to the upside above these highs and above the 800. So it's a very, anyways, I'm not saying sorry. So Bitcoin is given a very similar structure to the dollar, just in the opposite direction. So what I do see taking place in the 15 minutes is a bullish correction or a bullish reversal into some sort of a 30 minutes higher time frame target. So where is the higher time frame objective? So there's a few areas to focus on. First is, of course, we have the mitigation block right there, right? So this is one area of interest that the market could simply trade into. And then from there, we could see a bearish continuation to the downside into these lows and into that 800 EMA below. Okay, that's the first area of interest. Another area of interest, so if we go into the 15 minutes, there'll be a lot more clarity on that, would be this bearish order block right there. So this is the most recent sort of like significant block of order relative to where price currently is. So there is a likelihood we could see the market trade bullish into that bearish order block, which, by the way, is also where that 30 minutes mitigation block is. So there's a lot of confluence in this region, something I like to look for. And then we could see some sort of like reaction off that block. The market could potentially even take out this short-term high. And then after taking out a short-term high, we could then see some sort of a rejection and a bearish move to the downside. So this is another scenario that I do see taking place. So right now, the question then is this: is it worth, if there is a bullish setup on the 15 minutes time frame, is it worth taking that bullish setup? Personally, I like to take trades in line with the 30 and the 15. When the 30 and the 15 are aligned, that for me is like my A-star setup. But when the 30 and the 15 are misaligned, my personal preference is to take the 30 minutes setup. So in this case, the 30-minute setup would be bearish, right? So therefore, I personally would sit out on a 15-minute bullish opportunity in order to capitalize on a 30 minutes bearish trade. The reason for that is because in the past, when I used to take counter trend trades and trade both directions and all that kind of stuff, I realized that what it did to me psychologically is that, let's say that I get into the 15 minutes long, psychologically, it closes me to the possibility of getting in on a good 30 minutes entry, right? Because I'm so focused on my long position that I miss a very good entry opportunity on the 30 minutes, which would be the more rewarding trade, right? Compared to the 15 minutes, which could potentially yield a 1-to-1 or a 1-to-2 into this order block. But then if I hadn't committed to that long position and I had the mental capacity, not mental capacity, but I had the focus to identify that 30 minutes trade setup, that would have actually given me a much better gain in the trade. So based on that experience, I decided I'm going to stop trying to take trades both sides and be like, oh, I'm going to buy from here, sell here, and then I'm going to place a new sell position to the downside. It's not worth it. I'd just rather just wait for the best trade in that scenario, wait for the best setup in that scenario, and execute based on that. So that's what I'm going to do in this case.
Cool.
So besides that, that is just what I'm looking at on both Bitcoin and gold.
What particular challenges do you think you maybe experienced trading Bitcoin compared with gold? Are there any?
In terms of time?
Psychological ones. In terms of, yeah. Is there anything in particular that is more that stands out when you're trying to trade Bitcoin versus trading gold?
Oh, I see. Is there anything that stands out from what perspective? From a technical point of view, or,
no,
or fundamental,
from a mental challenge perspective?
From a mental challenge perspective, sometimes, so gold I find a lot easier to flow with, and by that I mean, like, with gold has a tendency to stay in ranges for a period of time. So, like, if you look at this case, the price has been moving in this range for a few days, right?
Yeah.
So for me, like with gold, as long as gold is in a range, it's easy for me to, like, I call it to do like ping pong trades, where I'm trading from one high to one low, from one low to one high, within some sort of trend context. Bitcoin, on the other hand, although I find Bitcoin technically easy, so by that it's like the structure and the cycle and the flow of price is significantly better than it was 2 years ago, because of ETF last year just brought a lot of institutional liquidity into Bitcoin that stabilized price and gave it a very like structural flow that is almost the same as Forex pairs, right? So that's when I started trading it. So structurally, I find it incredibly easy to identify trend. But the challenge I find with Bitcoin at times is it has a tendency to, like, the volatility around its accumulations is a lot higher than gold. So, for example, you could be in the right trade. I'll give an example, actually. This is something that happened to me recently, where, like, in this is a trade I was looking at actually on Friday. So I did a session, the New York session, the second session on Friday, and I talked about this set of shorts. And live, I was like, okay, I'm selling Bitcoin. But this is something that's very typical to Bitcoin that I find sometimes annoying. So set up a short, and I identified my entry opportunity was at this bearish order block. So I was like, cool. So I'd already entered at the bearish order blocks, but Bitcoin sometimes has this tendency to, like, wick around my area of entry. So it, like, even wicked and took out that, and I typically place my stop loss above highs or below lows. So it took me out of the trade, traded back into the range, hung around for a bit, and then it eventually gave that move to the downside. And I was simply, so this was a very ping pong trade, where I was just simply looking to take the trade from this order block down to the low, because for me the bigger move was going to be potentially to the upside. So I wasn't looking to hold this for a long time, but I essentially got wicked out of this trade. So Bitcoin has a tendency of, like, hanging around entry for a longer period of time, but I don't mind price hanging around the entry. But when the volatility around my entry is high, meaning that I am usually inches from getting stopped out, like, it would tease my stop loss multiple times, and sometimes it wouldn't stop me out. Sometimes it would tease my stop loss for, like, a good 4 hours and then run into my target. But there are times when it would tease my stop loss for 3 hours, and in the final 13 minutes, it will stop me out and then give that rally. Now, that is what I find mentally frustrating with Bitcoin at times.
Well,
it doesn't happen to be in gold. Yeah.
Like, for 3 days in a row, you write about it eventually, but you just hit this, like, sideways, up and down, you get stopped out. Try again. Eventually you write about the direction, but it's very frustrating. That's for sure.
That's particularly tough on new traders, isn't it? I think. That kind of having your stop loss toyed with like that for hours on end.
Yeah.
So what do you think about new traders then?
Sorry, what do I think in terms of what for new traders?
Bitcoin dollar.
In order to trade it?
Yeah.
Well, I mean, if you're a new trader, I 100% would not advise trying to trade gold, and I 1000% will not even advise trying to trade Bitcoin, because it's like you've just learned to ride a horse, and then all of a sudden you think you can ride a bull, or you haven't even learned to ride a horse yet, and you think you can ride a bull. I mean, it's like it doesn't it doesn't make any sense. First, learn how to ride a horse. In fact, learn how to ride a bicycle first with training wheels, and then make your way gradually up to the bull. So because the volatility, because it's like you definitely need to have psychological grit to trade gold, particularly. Personally, I like ranging markets. I love ranging markets more than trending markets. I'm more profitable when a market is in a concise range, as opposed to when it's just like shooting infinitely and giving new highs. So this is why I have an affinity with gold, because it just spends 80% of the time trading in a range. So 80% of the time I can trade it well. But the 20% of the time when it's trading outside of the range and it's like shooting into like some new levels, right? I'm just there like waiting and sitting on my hands and waiting for price to start ranging again. So first you need to identify like what kind of a trader you are. And it's easy to do that with gold, dollar, and euro dollar, and like your typical Forex pairs. And then once you kind of figure out what kind of trader you are, because you are, it's like if you find yourself, for example, very drawn to trading dollar yen or dollar Swiss, then it shows that you actually might be someone that likes to trade ranging markets. But if you find yourself, no, sorry, not ranging markets, like trending markets, because dollar yen, these things that trend quite a lot. But if you find yourself to have an affinity, it just keeps shooting. But if you have an affinity towards like euro dollar, pound dollar, or even like if you're a weirdo and you like trading euro pound, then it shows that you have an affinity towards like ranging markets. So
yeah, absolutely. And that's obviously going to.
So whenever I come across someone that tells me to trade euro pound, I'm just like, okay, you're an interesting breed of trader.
Yeah, absolutely.
Yeah, so this is running now. Gold is running. My entry on this so the issue with this, like, it wasn't executing me on my shortcut key, so I had to like do it manually. So my entry wasn't as pinpoint as I would have loved it to be. But as you can see, like, one thing I love about this, so price came down again. Notice how that 800 EMA is acting as an area of support for price. So price came down right into that 800 EMA, acted as an area of dynamic support for price, and it's now rejected and bounced off it. So it's always nice to have the 800 EMA as a good vantage point, because sometimes the price breaks a low, it's just heading to the 800 or heading to some low near that 800, and that would sort of be an area that price could react off.
Would you hold that while you go to bed? Because it's nighttime your time now, isn't it, Walter?
This one I'm holding definitely. I tried getting it. Now I finally have an entry. I'm not gonna close it just because I need to sleep.
Yeah, for sure.
So this one I would hold overnight, because if this is the low of the week, if my theory is like in terms of the flow of price with this is correct, then ideally this should be some sort of low of the week, and then for like maybe Tuesday, Wednesday, Thursday, we could see price trade into these highs, and then maybe Friday we could see the market maybe getting ready to give some sort of a correction move. So I don't want to wake up in the morning and find prices up here and I've closed down here. That would really irritate me. So I'd rather just leave this open.
Gotcha.
But I'll stay up for like another 2 hours just to see how it runs. Maybe watch a bit of TV. I've got a TV around my office, so I'll just watch a bit of TV and keep an eye on it.
Yeah.
Cool. Well, it looks like it's attempting to move back up again.
Yeah, it is. So it's just a waiting game at this point. And the Bitcoin is giving a nice bullish move. So again, with this, I'm not gonna buy. As tempting as it is, it's better to just wait for price to trade into this area of interest, into this box, and then from there, we could see some sort of a bearish reaction to the downside.
Cool. Can I just quickly show my charts here? Just give a quick update.
Oh yes, of course.
So this is the NASDAQ. This little block over here was the opening range. I was waiting for a little bit of a pullback. There was even a fair value gap within that range. Obviously, prior to the range actually coming to an end, 45 minutes into the session. So we had a very strong move back up. Same thing on the S&P 500. But I'm not going to chase this. I would preferably like to get in close to the top of the opening range. Ideally, if price can make it into this fair value gap where we got this green box here. If you just quickly have to look here at the price structure, I was tossing and turning before our session started today what this could have been. And I was thinking maybe an ABCX, ABC type of vibe, and then a move lower. And then at a later stage, a move back up. Now, obviously, that didn't happen. So what I'm currently thinking here is this is clearly an impulsive move to the upside here.
Mm-hmm.
So this more than likely was just a leading diagonal. Then we had an A, B, C for a 2. So wave 1, wave 2 correction, obviously impulsive. Third wave to the upside. So we might now be getting a little fourth wave lower and with more upside before we potentially get a deeper correction at a later stage. So if we can get a little bit of a deeper move here, maybe even back to that upper area of that opening range, then this could still be a trade that might work out. Meaning that I'm expecting at least one more little leg upwards.
Richard, just for clarification, your opening range was the first 15 minutes after the bell.
Yeah.
Yeah.
So that's just the opening range breakout strategy. It's nothing new. A lot of traders trade them on indices. So they will wait for once the cash session opens for 45 minutes. And then if you get let's say a breakout with momentum, typically, about after that first 15 minutes, then you can use different time frames, but I like using the 5-minute time frame. So I don't want to see a wick out of the range. I want to see a close above or below that range. And then that quite often gives you a nice type of a direction to expect, at least during the morning till afternoon session or lunch session. Does it always work? Obviously not. It's very simplistic in nature. But quite often, if you just use very strict management, I like to see an actual fair value gap that forms within that opening range. And quite often, even if you do get a breakout out of the opening range, whether it's bullish or bearish, when it price pulls back into range, quite often, if you do have a fair value gap there, it just gives you a slight bit better entry. So we are getting a slight pullback now. Let's see if I can actually figure out this fib retracements on this platform. So if we had a 1, 2, 3, 4, 5, an ABC, typically a fourth wave will pull back to a 38.2% retracement area, which is slightly above that opening range. So again, as I mentioned, we might be seeing a little fourth wave correction lower. So that's what I'm treating it as. If we can just get slightly lower there on the NASDAQ, then I'll be willing to take a trade. Don't know if we're actually going to have enough time during today's session, but that's what I'll be stalking after our morning session.
And then are you staying on the 5-minute if price came back to your opening range or to your fair value gap? Are you staying on the 5-minute then for confirmation of continuation?
Yeah, so what I'm trying to do here, so I'm trading two different strategies. The one is the liquidity sweep, where I want to see price take out level with a reversal. So it's completely like a reversal type setup. Whereas the orb setup, with this, they call it orb strategy, opening range breakout strategy, is more of like if you do get strong continuation or trends rather than a reversal, then I can pick between the two, at least try to have more options on the table. So that's the idea there. So if I can get a slightly deeper retracement here, then I'll probably attempt a trade there. Question is where to? I would feel way more comfortable getting in around about the 21,235 level, slightly above this fair value gap, almost in the middle of that opening range. And then obviously we had this overnight session high. So maybe if you see a revisit of that, there's quite a lot of structural points that might act as support around about that area. Right, crude oil. Very strong push up higher. As I mentioned, I'm treating this entire move to the upside that started on the 15th. That was last week, Thursday, right? I'm treating as a corrective structure, ABCX or double zigzag. So I'm expecting price to break above Friday's high. Or was this actually yesterday's high? It's Sunday's open. No, that was Friday's high on the 16th. And then a potential move to the downside. Now, if this occurs during my trade window, or maybe after even the trade window that spans between 9 and 11, things are getting late. My side in South Africa, if I am in front of the computer, we do take out this high, start seeing weakness, break of price structure to the downside, then that could potentially be a nice, decent setup to go short on crude oil. Okay. Sorry, guys, we've got some viewers here with some comments. Tuurlijk, that sounds Dutch. Walter, you absolute legend. You got a fan there, Walter.
Oh, that's
Robert,
very surprising.
Robert, he says he uses the first 5-minute orb, but I started also working out the 50-minute orb just in case. Cool, Robert. How's that going? I know the 15 minutes quite old school technique, but again, I think you should add a little bit more into there than just like, getting into a trade as soon as you get a breakout, right? So always the risk and reward potential is also very important. Sometimes that range can be pretty large, especially on the NASDAQ. So you don't want to just jump in, place your stop loss below the range, and then, expect a massive move. But it can happen. I've seen it happens. But last week, I'm trading this technique, got chopped up. Eventually got the direction right, but just very volatile. Right. Stopped out multiple times. Yeah, Robert, maybe Walter, you can remember this. He's also trying to add the 80% value area rule to it, or at least a sim for a little bit. Who said that, like, if you have, I can't remember exactly how that works, there's an 80% chance the market will go in a certain direction if it trades above the value area, or 80% above the value area? Remember? Can you remember?
Yeah, so that's, I don't remember who, well, I know one person that
Larry
uses
something. He was a floor trader.
Yeah. Yeah, so one person that uses value area theory.
I just can't remember.
I mean, value area is really powerful stuff. Like, it's obviously you're looking for, you're utilizing the, I haven't used it in years. I think TradingView now has the function. Let me see if I can find it again.
What, an indicator?
Yes. So you basically just define the VARH and the VARL, so the value area high and the value area low. And then you can then from there identify where the point of, you call that the point of liquidity is. I forgot what it's called actually. Is a technical
point of control.
Point of control. That's the one, POC. And then you identify the POC, and then the POC is essentially where you're going to be looking to a lot of the time take trades from, right?
Yeah.
And then because like when price then trades away from the value area, so 80% away from the value area, that's usually an indication of like a changing character. So you can then use that in confluence with break of market structure and concepts. But yeah, I simplified mine. I got rid of using that a few years back.
Yeah, the indicator, there's one indicator called SVP on TradingView, which will give you the value area. And I think, I was taught that you're supposed to set that up on the 30-minute chart.
Yeah, I've also remember something like that. 30 minutes, right?
30-minute chart is, and it's yesterday's. So you're monitoring the level based off of yesterday's value area today. So it's market sentiment compared with yesterday's main trading range. Yeah.
Are you trying to find it there, Walter?
Oh no, I wasn't trying to find it.
Yeah, SVP is one. I think there's others that just talk about volume, but SVP is session volume profile, which works pretty well. But you've got to set it on the 30-minute.
Mm-hmm.
Yeah, I just use pure price action now the majority of the time.
Yeah.
Yeah, I mean, that's I don't know, Lara, if you experienced this dealing with traders during the years, but it's certainly true from my experience and hearing it from a lot of traders that, you know, you when you do start, you want the best and the most promising holy grail indicator or combination of them. And I remember back in the days when I started, how many indicators I used to look at, and it's, you know, after a while, you don't even know what the hell's going on anymore. And the more experience you build up through the years, you tend to use less and less indicators.
Because I always think that understanding price action is, again, I mentioned this when I was speaking with Paul, it's like learning a new language. And so
it is.
At the start, you need all the help you can get.
Yeah.
Absolutely.
I remember when I moved abroad as a young person, and I didn't know the language, and I remember sitting in class, and I had my dictionary on my desk, and I was looking up every second word, and everyone thought it was hilarious. But that, for me, that's like the equivalent of having loads of indicators. You're just looking for crutches, and you're looking for some kind of guidance. But over time, your brain manages to interpret the language. So you kind of can just go with price action, can't you, and market structure?
Exactly.
So you're indicating.
Yeah, you hit it on the head. Like this is the goal with using any kind of indicator. Like number one, you need to understand what is the purpose of me using this indicator. What am I trying to get out of it? And number two is like you need to always try to understand the mathematics or the fundamentals behind that indicator. Like why does it work and why is it something that is used in the market? Because generally, like indicators fall into either three categories. Like either it's a momentum indicator or a volatility indicator or a trend indicator to help to identify trends. And like when I used to use RSI, relative strength index, that was to identify divergence and convergence, or mainly divergence. And divergence was an indicator of a shift, or potential shift in momentum. But then when I looked into like, okay, how is RSI calculated? I realized, oh, it's calculated off of periods over time, and the divergence is created when you have an initial high, for example, and let's say it took 30 periods for price to get to that high. So 30 periods is like 30 candles within that time frame. And then the market price pulled away, and then it came back up and it gave a higher high. But this time it took 10 periods for it to create a new high. So 10 new candles to create a high. So that means price moved faster in this period than it did in this period. So therefore, there is a divergence of time and price. And that divergence is an indication that something has changed in momentum. And therefore, something is about to happen. A reversal is about to happen. So when I learned that, now I can see price and I can see when there is a divergence without needing an RSI.
Yeah,
because I'm
absolutely.
like, oh, there's a high, there's a high. You know, these two highs, you know, this high took 20 minutes to form, whereas this high took 10 minutes to form. So therefore, there's most likely a divergence between these two highs.
Yeah, which comes with experience, right?
Exactly. Yeah.
Exactly.
I think a lot of mistakes beginner traders also makes putting on, you know, indicators, you know, tell you the same sort of thing. You know, using 5 indicators that's all actually built for trend following, and they don't know this. Like you said, Walter, it's important that you
like, why do you need 10 trend following indicators? It's absolutely crazy.
on all the time frame sort of thing, you know, it's like you got these heat maps underneath. It's like red and green all over the show, different time frames. No, can't. Really can't.
Yeah.
You know, but there needs to be like a specific form of conscious training to sort of like be able to go to have a shift, because Robert, I see your question, right? It's like, yeah, my goal is to move back to being able to see price action, you know, with volume. And of course, like that's a very, very good goal to have, right? And there are ways to like cut down the learning process of it could take you like maybe a few months or even a year or two to be able to get to achieve that goal, to cut it down to like 6 months. And something I did quite a lot of in my early days or it's actually my mid years in trading, was flashcarding, where I created flashcards of my setups with the indicators and everything, and then highlighted. So everything is all aligned, and I labeled and annotated. And then I went for a period of time for I think for a 4 or 5 months period, where like a big part of my trading routine in the mornings was to go through my flashcards. And there was like hundreds of flashcards, and I'll sit in front of my screen and I'll just watch it like I'm watching a movie, and I'll just internalize these structures and the patterns and everything around it. And that's how I was able to get rid of using indicators and start reading price actions a lot better.
Yeah. And that exposure, that exposure is so important, isn't it? Just seeing that set up time and time and time again. Like the bars tool on TradingView is really good for that as well. You can just look at your setup on there. I mean, my camera roll is full of what you're describing, but it's on the phone. But it's all really important stuff for your brain, because over time it just knows. But you've got to put in the work at the start. That's the thing.
Exactly.
Teach it. So the visual learning.
Very important, because I mean we are visual creatures, right? We learn by visuals.
Yeah.
And then you learn by pain as well, I suppose, right? Financial pain.
Yes, sure. For sure. Whether you can
do the visual, so you don't have the financial pain.
Yeah, right. But you've got to be so resilient, I think, as well. I mean, we know what the stats are around successful traders, don't we? Everyone knows most people quit. But it's that resilience and then learning to take that to discipline, I think.
Yeah.
Because you've got to be tough. You've got to be mentally tough, haven't you? Because it's really hard to keep taking losses and keep working and feel like you're not quite getting there yet. And it can take years.
What's it saying where they say like trading's like the only job, if you do treat it like one, that you'll be probably wrong more than often, It's like if you were to be wrong so many times in a normal job, then you'll probably be fired.
You'd be fired years ago.
Yeah. So you just got to deal with it. It's like, how do you deal with it? It's like, just do what you plan to do. And as long as you've done that, you've at least done more than most people have done,
Yeah.
Don't just jump into trades and trade just because you felt you should. Maybe if you have more experience, I think you also get the gut feel the more you trade, for sure.
Oh yeah, 100%. Yeah, like the gut is. I mean, this is where like I think like at some point, almost anyone would get like a aha moment where something just drops, or a penny just drops, or something just clicks. Yeah. And I think like that aha moment is when your intuition has found a very good alignment with with obviously what you're perceiving in the market, but also with your strategy, with everything going on. So it's like, because I remember like before I had my penny drop moments, I had a period where things made sense, plan was working, and then I went for a period of loss after loss after loss. All of a sudden I look at the market and nothing is making sense anymore, and it's completely algebra. And then I went through this period of, okay, what the hell, like it feels like everything I've learned all of a sudden is no longer makes sense. So I had to take some time off. So I took some time off. I went to an island, chilled for a bit, and then I came back, and then I went back on my computer, and I was like, okay, I'm gonna go back and see the previous trades that I've taken, from the start of the year, and I'm going to see what worked then. I did that, and then I came back to the present day, and I realized that, hold on a second, what I was doing was working. I just couldn't see it because I don't know, I just had overload in my brain. But then I had a penny drop where it all makes sense all of a sudden, because I used to have so much expectation from the market where I was like, oh, I want to always have a winning trade, or I always want to have a winning week or a winning month. And I think like that expectation always got in the way of me being able to see things objectively. So my penny drop moment was realizing how simple trading was. I'm just like, this setup happens all the time. It's not always going to be profitable, but it happens all the time. All I need to do is take it every single time it presents itself. And then I just got into this flow of, I wake up, I do my analysis, I see my setup, I take the trade, I move on with the day, do the same thing the next day and the next day and the next day. And all of a sudden it's like, I'm not actually like getting consistently profitable. And I'm like, okay, this it's been this simple, right? And another thing that helped me is lengthening my time horizon. So rather than trying to be profitable at the end of the week, which is what my goal was always, I now realize I just gonna aim to be profitable at the end of the month or the quarter, right?
Yeah.
So now I'm like thinking in like a longer time horizon. So now the losses, if I have like a losing week, for me it's not a big deal. Like it's like, okay, next week I can make it all back and ending in profit. All I need to do is stay objective. But if I had a big expectation,
that is possible. Because if you continuously lose, then obviously you probably don't have a proper system. I mean, that can be soul destroying. If you get like losing week after week after week, and then you just like, unfortunately give up, or I don't know. It's soul draining. That's for sure.
You can have a great system that could cause you to lose for days on end, right?
Yeah,
and that's because
one guy can trade it, the other guy can't.
But that's because the market character changes. Like a hedge fund strategy isn't profitable all year round. Like a great hedge fund could have a quarter of losses, right? But they still end the year with like a good 20-25% gain. So you can have a great system that still loses. But I think the most important thing is identifying that, okay, it's not the system that is the problem here. It's the market is in a very different environment right now that's potentially temporary. I just need to ride this out, right? And I think that's where a bit of experience and skill comes in, to know when to ride it out, to know when to scale down your risk, trade 0.1%, 0.2%.
And don't mess around with the system too much either. Traders don't stick around with things for long enough. They just jump from the one to the other, from the one to the other. It can be very I mean, well, I've been there. You guys probably been there. So.
Yeah, I think that's the case for most people. But in a way, you've got to figure out what feels right to you, don't you, as an individual as well? So there's going to be that sort of phase of trying a couple different things. But then you just got to stick with something because, for sure.
Listen, peeps, we've got to the end of it already. That was a quick one. It was nice chatting to you, as always. Lara, Walter.
Likewise.
Robert.
Likewise.
Felix.
That was,
So,
nice to
thanks
see
for
you.
that. To all our viewers, thanks for watching. Stick around for the next round of coaches. I'll be back tomorrow morning again. Lara, you'll be back next Monday, right?
Apart from I think markets close next Monday. So
that's right. What is it next Monday?
It's Memorial Day next Monday.
So we have a day off.
Possibly.
Awesome.
I don't think the US but I'll see you, if not next Monday, the one after.
Cool. Take care, guys. Have a good one.
Hey guys, have a good week.
Have a good one, guys.
Cheers. Bye-bye.
You too. All the best, guys. Bye.
Bye.
Hello, Paul. Hello, Jannie.
Oh, Igor, how's it going, guys? How's it going?
Beautiful.
Beautiful. I like that answer. I'm just about to place a trade on gold, if you don't mind.
Yes, please.
So I'll just quickly explain the reason. I entered a trade on Friday, a long position. That's after the trade on Thursday. They played out really well. And yeah, it's ready now for another opportunity. Okay, so let me just, so I'm in a trade. I'll explain the reason why I entered the trade. So let me just take this long, yeah. Huh? Oh, am I maxed out? You know, with these accounts, we just kind of do whatever we want. Okay, there we go. All right, so there we entered. I just entered the trade there, and my stop loss is going to be just below that strong 1 hour candle. Okay, and the reason for that is because if you look at the first entry, first of all, was placed on Friday, and that was based off this engulfing candle coming off the daily support level, right? So on Friday, I just showed that, well, this was the initial trade that I took right up to there. That was a 1 to 11, and then we came back down to the daily support level, and then you can go to the 1 hour. Sometimes smaller if you want to look for specific patterns, but there were no patterns here. This was based off the engulfing candle, right? So the engulfing candle, that's the reason for the trade. And then this morning we gapped up, and then we came down to fill the gap, and then we pushed back to the previous highs, and then we started to retrace. And when we started to retrace, I just drew the FIB levels to see where this can potentially go, and it bounced off the 61.8 with a very strong bullish hammer there. So that's the reason for the second trade. Okay, now the take profit will be more or less at the same level where I took, well, where the first take profit is. Okay, so basically expect this gap to be filled. I do want to short gold, but not right now. I don't think it's ready to short. I think it can potentially come up and give us a third touch here of this diagonal line. That's when I'll be interested in a short. Definitely not right now. It's just, in my experience, it's not a good idea to ignore very strong support levels in the daily, weekly, or monthly time frame, right? Especially if you're in a very clear trend on the longer time frames, which we are in gold. So, so yeah, that's the reason for that trade. And yeah, that's, so I'm now in the second position here on gold. On what's the other one? Oh, gold. Sorry, the pound US dollar. The pound US dollar just now basically came back down to the support level. So just let me just go back to the 4 hour time frame and just like, let's just have a quick recap here. Yeah, I on Thursday, Friday, and most of last week, I wasn't really I didn't have a strong bias because there were very strong cases for both directions. Very strong case for a long and also a very strong case for a short. So I wanted price to first break out of this this higher low coming off that diagonal line, because for as long as price is still below here, this head and shoulders pattern is still in play because he's still below that. So for me, price had to come all the way down and break that low and hopefully give us that level. Or the second scenario was it had to break this higher low, and that's what happened. Okay. Now, we closed. Yeah, this is where we broke out. So can you trade this? Can you trade this when you see this? Well, the answer is yes and no. I know that's a bit of a weird answer, but the reason why it's yes and no is because today, once we closed above this this resistance level here, if you look at your daily ATR, you've already exceeded the daily ATR. So, and I think we moved up like 140 pips. So yeah, technically speaking, yes, you can. You can go to a smaller time frame. See, there you broke out. There's your pullback, and now there you are breaking back above the support, or that resistance level. Can you take it? Technically, yes, but like if you look at the daily ATR, it's never a good idea. We spoke about this before. If you see an opportunity for price action to break out to the upside, but you've already exceeded the daily ATR, it's not a good idea. You can, or you can ask, what about swing trading? Like, can you leave it open for swing trading? Well, in that case, you first want to get that pullback after the breakout. You don't just trade the breakout. You trade the pullback first. So we are now in this pullback phase. Now on the smaller time frames, you can see on the half an hour, we got that engulfing candle. Can you trade it when this breaks out there? Again, yes, you can. I personally think it will be best to wait until tomorrow morning for the London session, simply because of the fact that we've already exceeded the ATR. And, it's not really a good idea, even though we are right there. I would wait for tomorrow morning and then look for some sort of, maybe we're getting a sideways consolidation with a breakout or a double bottom or anything that we typically look for, right? Anything in your toolbox. Look for that and see, first of all, tomorrow morning, you want to have a look to see if this level is holding, because it can just obviously just reverse. But my bias is now definitely bullish because we broke that. Okay, so this head and shoulders pattern has now been invalidated. Okay, because you've got this two diagonal lines. There was a shorter term one as well, if you can remember, right? That shorter term one. And I traded the pullback or the retest of this breakout level, and it didn't work out. We got that close above that resistance level. So that's where I got out. So we broke that diagonal line. We also broke that diagonal line. We've got that inverted head and shoulders pattern. The weekly time frame gave us a bullish candle. Just trust me, it's bullish, right? So the pound US dollar, I will definitely tomorrow morning, I will look for setups in the same direction. If there is anything, remember the trade still needs to make sense. You can't just place the trade because you're above support or resistance or whatever. Right, so, but anyway, where we are right now, we are retesting that breakout level. That's where we are, so that's good. Hopefully not much will happen. I hope it's not going to break out higher. Well, even if it does, there will always be an opportunity, very similar to gold. What's gold doing, by the way? Not much. Like, so if you didn't think that was a good opportunity to go long, and then you waited for whatever it is that you're waiting for, then there will always be another opportunity along the way for you to enter. Okay, so that's how I look at the pound US dollar as well. So even though we are there right now, not a good place to trade because you've already exceeded the daily ATR. That's the main reason why. Okay, so the other market is Bitcoin. Bitcoin, we had a bit of a breakout to the upside, and then we failed, and now we basically just back into this range. I don't know what to expect here because for me, we just back into this range. For me, I still I wait for the 98 level. If I don't get it, I don't get it. That's fine. But that's just how I see that. Like, it looked like it wanted to break out, and honestly, if it does go higher, then again, very similar to what I just showed on gold and the pound US dollar, there will be an opportunity that makes sense. So, you know, there's no point guessing whether this is gonna go higher or lower or whatever. Just I wait for key levels. It's as simple as that. And then the NASDAQ has been pushing higher today. Well, in the pre-market, it was going lower. And now with the open, we just immediately pushed to the upside. So I've mentioned this on Friday, even though this looks like it could potentially go and make all-time highs, it can do that. It definitely can do that, but it can also fall short. So there are, again, those two scenarios. Now, where we are right now, I don't think it's a good idea to place any trades because you're not at any key levels, or there's nothing that's of interest to me right now. But the two scenarios is it's either going to break this high, and then that's the level I would start to pay attention to the NASDAQ. And the second one is obviously it can fall short and give you that divergence, okay, wherever that may be. I don't know if it's going to be there. It's just a scenario. The thing about this divergence in price, it's not something you trade. It's just something you look out for. So I will only call this a diversion in price if this comes all the way back low and break this support level. Then I'll say, okay, that's definitely a divergence in price. It's unlikely to make new highs. But when you are still trading towards that level, it's very difficult to tell whether you're going to get that or whether it's going to break to the new highs. It's difficult to tell when exactly you're going to get that. It's similar to gold, right? When gold moved higher, see, now that was when it started to just break down lower, but there's no place in terms of like from a technical point of view, it's very difficult to say this is going to be the absolute high before it starts to drop like lower. You can just, first of all, when you see this steep incline here, that should be your first warning, right? You're not taking any longs after such a strong rally. It's probably going to pull back. So then it did pull back, and then we broke that low right up to that support level, and now we're pushing back higher. So that's all I'm saying. Okay, you don't know on the NASDAQ whether this is going to push and make new highs or if it's going to fall short. But where we are right now, it's not a good time to place any kind of longer term positions, if that makes any sense, right? So yeah, those are the markets for right now. It's just a brief kind of overview, but the pound US dollar, I would definitely say tomorrow morning, have a look and see what happens at this level. Are we still at this level, and is something forming that indicates that this is going to reverse back to the upside? So that's it from me for now. Over to you, please, Igor, if you don't mind.
Yes, thank you, Jannie. Thank you. So let me start from my evil plan first. So I think it's maybe
what?
Just
did you say?
Evil plan? Yes.
So can you give me some hand wringing when you say that, please?
So, guys, first I want to check a little bit the news. So in this case, I'm watching right now the calendar for this week. And there's nothing special, nothing that can move the market. But what I'm looking at is actually to see finally what US dollar index wants, up or down. And this is the same thing that Jannie said about Friday. So during the Friday, I was a little bit confused because it was, I'm not clear about the trend of US dollar. And I will show that on the chart in just a couple minutes. But what I'm looking for what's happened here, the first thing that I will watch is tomorrow early morning interest rate for the Aussie. And we know that there is a high probability that we will have a interest rate cut. if I see after this cut that price are putting higher and higher against US dollar, that will be one of the good indicators fundamentally that US dollar index is going lower. And this is something that I will watch. The same thing I can use for a CAD that we have during the Tuesday. What I want to see is to see that currencies going be stronger against US dollar, whatever the news are, especially if we get the news where price should go down and price start to go up. And of course, for example, British pound dollar, I expect to see British pound dollar higher this week just because of this today's open. Because like Jannie said, we broke 1.336. After that resistance that we had from the whole previous week, I need to be bullish just because of that. And this news should give a little bit fuel to the move. But I think that Aussie is the best indicator here, just because I expect interest rate cut. And after that, if we see the push higher, means that US dollar should go down. Now I will back to the charts, and I will show you just one thing that I watch right now, just to pick the chart. What I'm looking for is US dollar index, and
sorry,
Igor, the US dollar.
Okay, your
yes.
chart's not showing. Sorry.
Yes, excellent. So I talked a lot about this with Howard during the Friday, because during this session, because market was boring, we started to analyze for major currency pairs and assets weekly charts, just to figure out what should be the next big move. And then, of course, using top-down analysis, we will talk further and further for a lot of currencies. But when I go to the weekly chart, I figure out something which is very interesting, that from the 2011, so last 15 years, maybe more, just from the crisis, very long time, there is a strong trend line here. And the last time we were very close during the 2021. Now we are close a lot to this line, and this can be really good move per US dollar index. And after that, a bullish bias again. So what's interesting here? If we watch the US dollar index on the weekly chart, we can see 4 candles, one by one, huge recovery of US dollar index, which gives a little bit, for me, the good bias. I wanted to see British pound dollar, euro dollar down. I wanted to see new lows. I wanted to 1.313 for British pound dollar, 1.3 for British pound dollar. I wanted that to see, but I didn't see that. After 4 weeks, we are still very close to the ultimate high for British pound dollar, because the ultimate high for British pound dollar is a 1.344, and today we reach 1.34. So we are here after 4 weeks. This trend holds, and this market structure, bullish market structure holds. And because of that, I think that there is a probability that this week can be a bearish week for US dollar index, and maybe we can start to make this move. Maybe these 4 weeks were just a correction. If you look Elliott waves, Howard is an expert for the Elliott waves, and he showed that approach related to the lags and everything, and it's a little bit aligned with my look of the market here. And I would like to see this move, and that move will give us a new highs for euro dollar and British pound dollar for sure. So I just think about this bias, and I just think about this bearish candle. But this is only first day of the week, and we need to see what will happen here. Now I'm back to the British pound dollar, but I will go to the futures just to do that. I can analyze the volume here. So if I go to the futures market, I will go just to the 30-minute chart here. What's interesting? Let me maybe 1 hour better thing. What is the interesting thing? I put one indicator instead of volume. I put a volume divergence line just because of the visual representation. What I want to show you here that we got that the last week, which is very good indicator. A lot of times when we approach some big resistance or support, last week the British pound dollar made one push. And that push was just when we broke today 1.336, very important level. If we check this bearish divergence here for the volume, this is the volume. So what's happened there? We had a higher price for British pound dollar, higher. And in that moment, when we put these two very big hourly candles from the 1.333 to 1.336, there was a huge downtrend for the volume. So if I put the volume chart, you can see that, but this is, I think, much better visual representation to see. Look, this price is going higher and higher, and volume is lower and lower. And that was the very good signal that we will have some kind of the correction. And we had that correction, and we started to go down, and we reached 1.326. And during the Friday, happened that we even went 10 pips lower. And then what's happened, which is interesting, is volume started to go up. That happened in the second part of the US session during the Friday. I figure out that something will be there. I even made a buy trade during the live session, which I closed. Nothing happened good there. But look this, the whole Monday's open, we got a huge push higher. And now our volume is higher and higher. And even I see the price a little bit lower here last few hours. The volume is still strong. So I'm watching the volume even now on the 30-minute charts on the futures market. And you can see, look, this 30-minute chart, like volume is still very strong. So that bullish bias, I think, holds. And that's why I decided to enter in one trade. And I will show that trade right a moment. This was just introduction for that. I will just show my screen again to the trading platform. This is the trading platform. Just before, in the moment when we start this conversation and this session, I waited for the hourly close, and very similar to Jannie, I realized that we made.
Sorry, Igor. We can't see your chart.
Okay, I will try again. I will try again right now. Can you see right now?
Yeah, it's coming. Yeah, thank you.
Excellent. So, yes, super. And what I did, I created just in the moment when we start this session, I create this trade. Why then? Because I see that volume holds. So volume didn't decrease down. I saw that we made a pullback of 23.6% down. I know it can be a little bit deeper, which would be beautiful, but there's no bearish momentum for that. So I enter into the trade and I put relatively tight stop loss, 20 pips, because I think that during the Euro session, the lowest price that we had was 1.3345, something like that. So 5 pips below that low that we had, and now we're pushing higher. So my trade is open. Of course, my targets are 1.34 and 343. But if we see weak US dollar index, we can get ultimate new highs. And this trade very easily can become a swing trade. So I will just, what I want to see, I will back again to the trading view. Sorry, because I I do that very often from one chart to another chart. But what I want to see related to the British pound dollar is that during this day, we again move to the 1.34 level. And if we accomplish that, I will close my trade. My trade will be open, and I will wait. Maybe during the Asia session, we can make a new push and make new ultimate highs. Because if we really check the British pound dollar right now, we are so close to the ultimate high, and we really can make a push. And usually, when we have this kind of the holding momentum during the Monday, when we break the resistance of the previous week, touch the new high and holds, I think that the next day in the early morning, we can see the new highs. So this is why I need to be very cautious and to monitor market to enter in the right moment. So not to avoid or skip this good trade, because I think if we break this 1.344 level, that push can be very strong. Because if you watch this, we stopped on that level in September 2024. We are very close right now. And if we break that, it will be maybe move very, very big move, because I checked in the volume profile. I see that there's no a lot of strong resistance in that area. And that will be ultimate high and a very interesting thing. Related for the euro dollar is a little bit, I say, very similar to British pound dollar, but the difference is that our higher high is a little bit far away from that. It's 1.156 level, and we have enough room for that new high here. Maybe for risk reward, the potential euro dollar is better, but I like higher volatility in British pound dollar, so I'm there still, and I will of course watch that and see what will happen there. What I don't like right now is the price. There's no momentum, neither to upside, neither to downside, which can be a little bit bad for any kind of the trade. So I hope that during this session we will see some kind of the push in any direction. So I'm ready to close my trade earlier if I see something, but right now I'm just watching the market. So US dollar, Japanese yen. I talk a lot about this resistance that we had around 149 level, 150 level. And we had few breakups, few rejection, and now we're really, really down. If we see this weak US dollar index, this can be very interesting pair. This is be very interesting pair. And like I said the last week, this can be either the positional trade, because if we go to the weekly chart and we analyze this is very, very interesting. So from one side, we have the US dollar market, where every single month we talking about decrease of the interest rate. We see that dollar index is a little bit weak. Even when they have a big push, it's nothing special. On the other side, we have a Japanese yen, where Japanese bank said that they're ready to increase interest rate this year a couple times if they need that, for sure at September. And they really want to increase interest rate. And if we have one currency where we decrease interest rate because of the stock market, where the whole government and the bank and the Donald Trump, everyone push lower interest rate. And the other side, we have a country that's ready to increase interest rate. I think that this can be monumental push, very big push in relation US dollar, Japanese yen. So we analyzed with Howard, I think Friday, of these charts. And as you can see, when we find the ultimate low here at 105, and we see this price around 150, we can see a potential, maybe, of course, this is just scenario and the dream, about 30% of the craze of the price of the US dollar, Japanese yen, just as a possibility. But I just want to think about that. And this is the something that I will really monitor very, very closely. Maybe this week, maybe I will create some positional trade. But I just want to see the end of the Monday. I just want to see reaction of the US dollar index during the Monday before I enter into any trade, because of the some very, very strong push. So this is the things that I'm really, really watching right now. But the US dollar index is everything here, and behavior of US dollar index is crucial for me. So I just want to ask you guys, what do you think about US dollar, Japanese yen when you watch weekly and daily chart? What's your opinion about this just technically, without fundamentals?
Well, I have an expert who can answer that question. His name's Igor.
Yeah. Yes. Igor's the best. Well, I mean, just from a technical point of view, you can see that you've got some sort of resistance level there across the chart that covers multiple touching points, and we've recently just touched that resistance level, and now we're coming off it. So that just by looking at that, even though it's a bit late to enter now, I do think that can potentially go to that low you can see on that chart.
Yeah.
Yes. So yeah. I see that too. The only thing that I just struggle is that a lot of times this US dollar, Japanese yen just start to go offside on some ranging market in some moment, and I'm confused so often. So this is the why I'm just waiting something. But when I watch the volume, I see that we were really on the high volume price, and now I think that this selling pressure can really change the shift and everything. But I think that everything is US dollar index. I really need to watch the US dollar index, because that will change everything in the next days and weeks. So I think it's really crucial here.
It's the most impactful thing at the moment. You know, whatever's going on with the dollar is messing with everything for sure. But then you go back to the whole thing. How do we quantify what's going to happen next when we don't know? So
yes.
Yeah, exactly. Well, I think this is why it's so important to just trust and rely on your technical analysis, right? And stack the probabilities, which is on the pound US dollar. We spoke about, I don't know if we were in the same session, Igor, but I pointed out that on the 4-hour time frame, you can very clearly see that V-shape, higher low. And that was one of the, the probability stackers, if you will, that this could potentially turn around, but it wasn't enough. You need more. And now we're breaking through. But just to get back to the pound US dollar, if we're going to break higher, from where we are right now, it has the potential to move 200 pips higher for this month, okay, just based on the monthly ATR.
Yeah.
So if you look at the ATR, what it's done so far, and you look at the monthly ATR, there's a lot of gas in the tank, right? There's plenty left, because it hasn't done much for the first. We're already on the 19th, so it hasn't done much. So it can very easily just start to move really aggressively in the last 2 weeks, and so for me, there's definitely, from where we are right now. Obviously, I'm going to look at it tomorrow, but this, if it does find direction, and I feel there's enough now for me to be long. So then if I can just get a good entry tomorrow, then that will be a swing trade, and I will probably aim for something close to 200 pips, right? It may not be necessarily a technical level, because the next technical level on the longer time frames is very far up. I'm not sure if you had a look at that, but
Yes,
the next technical level, it will be if you can just look at your chart, it's like a 1.4, almost close to 1.42.
Yes.
Right. So
yes.
that's so but that's not going to happen in one swoop. It's not going to happen in one move. So for the next 2 weeks, I think, like, especially if you want to make sure that you don't like have like unrealistic targets, unless you want to keep it open for longer than that, you still need to look at your patterns and make sure that if you see an obvious reversal or it's hitting some sort of resistance and you can see like a pattern that it's probably going to come down here, you want to get out. But for me, I think this month definitely has potentially 200 pips that it can move still to the upside if it continues tomorrow morning.
Just to add something, I remember that day because it was my birthday. It was May 6th, and the price, yes, the price went to the same level like today. Everything very, very similar. We went to 1.34, and then we start to go down. And if you go to the chart and analyze and just create an image and watch on the left-hand side, watch today movement, there is one big difference. On May 6th, the volume started to decrease and we started to go down like a V shape. But today, the volume holds. So I feel like a big dogs, that institutional traders, they want to go up. And this is very strange for me, because you saw how we couldn't go to the 38% Fibonacci retracement down. We only right now 33.6%, and we're holding that and we're trying to go up. So this is why I enter into the trade, and this is I just feel that even today we can go above 1.34. So I think that this session will reveal a lot of things.
Yeah, I think, but but we definitely agree on that. It definitely looks more bullish than bearish, right? The bias is definitely bullish.
Yes,
it's the bearish scenarios is now all of it has been invalidated now. So
yes, of course.
Yeah. So you've covered the dollar yen. What does the little banner tell us here? Crypto Master Paul hits all coins. Igor and analyzes major Forex pairs. Okay. And I dominate the NASDAQ? Yeah, I like that.
Each to their own.
Yeah. All right. But Igor, you've all right. So that's the pound US dollar and the dollar yen. Do you look at the euro dollar as well, or are you also just looking or focusing on the pound US dollar?
You asked me, Jannie.
Yes.
Yes.
Yeah.
Okay.
Yeah. Igor. Yeah. Sorry.
Okay. That's a check. No, I watch euro dollar too, because both are interesting. But the problem is the good thing is that British pound dollar really has a good volatility, and when I enter very fast, I can reach new highs. Sometimes I can move stop loss. I feel much comfortable. Euro dollar is too slow for me. But if I see that euro dollar in some moments start to go faster than British pound dollar, I'm ready to make a euro dollar trade, of course.
Okay. So is that something? So you're not looking at that right now because we haven't seen the chart. So that's why I'm asking. It's not on your radar right now.
Yes, on my radar was the whole euro session, and what's happened during the euro session. Do you know the moment when we got 1.336 for British pound dollar? In the same time, the euro dollar hit the high, and then British pound dollar started to go down and went down 15 pips, and euro dollar just go straight away. And I just started to think, wow, euro dollar is good, but risk reward ratio for British pound dollar is excellent. And then I entered and made trade just during the euro session and made almost more than 50 pips. So the British pound dollar sometimes just move lower and higher, just I can enter into the good price level. So euro dollar doesn't provide me that good price level as British pound dollar sometimes. Only that.
Most of the time, not sometimes. Yeah, it is just a better pair to trade. I fully agree with that. Yeah. Right. Is there any other pairs you want to show, or were those the main pairs you wanted to focus on today?
I think that I want to hear Paul right now.
Oh, we all want to.
My crypto guy. Yeah.
You're so lovely, Igor. You're so good. Hi, Robert. Good to see you. Thanks for joining us.
Hey, Robert.
Okay, yeah, sure. It's Bitcoin day. Been doing Bitcoin coverage all day. Let's see if I know what I'm talking about. Let's have a look. Although I'm hoping that this trade will come into play right now. So this is CFX. I'll show you the setup in a minute. Can you see that okay?
Yep.
Yeah.
So just missed my entry by a Satoshi, by pip, something very small. Hasn't quite hit it yet. So it's still in play. So I'm just waiting for that. Again, I'm not chasing it. It comes to my entrance. All right, there is no trade. But let's just have a quick check, see if it's in play. CFX, yeah, that's fine. Squeeze between the 50 and the 200. I mean, I imagine if Bitcoin comes down, it's going to come back in here. But I'll manage it. I'm curious to see what happens. But let's just jump in with Bitcoin, and I'll let you know if I get my entrance on there. Hang on, the price line's not on. Let's put that on. It's always helpful. There we go. Yeah, so it's just sitting above my entrance. I'm looking for an entrance at 847. We're currently at 874. Okay, cool. Right. Anyway, Bitcoin. Let's have a look. A slightly fresh 12-hour chart. Again, golden cross incoming, which is a super bullish signal. And we're just sitting below resistance, essentially. And we're in this little range. So if we put this, the local support is about 100K. It's just the bottom, and we're just kind of ranging at the moment. So it could go either way, but you know, a break of all-time highs, I can see it happening. I can see a retrace back down to here for sure. But yeah, this is the big picture. Nothing really has changed since the weekend. The fact that it's holding its own in this upper range is quite good. That's fine. If you look at previously the volatility, you know, by the end of the week, if we're still up here and we haven't broken down, then that would have been, you know, the highest kind of time frame, the longest duration we've managed to stay above 100K for a while. We're not quite there yet, but you can see it just comes up and comes down, sits for a little bit and then comes down. So we obviously want the opposite to happen for sure, but that's essentially it. We've still got bearish divergence. Obviously it's daily, it's happening in slow motion. So a pullback to 98, 97, perfectly fine. Perfectly normal, but this would soon be invalidated if Bitcoin decides to have a go at all-time highs. But we're talking about 100K floor locally for the price action at the moment, but this bearish divergence, of course, is looking for a little bit lower than that for a possible pullback. But yeah, it'd be interesting to see what happens here. And again, if we're talking about pullbacks, you know, you should look at these charts like you're doing a court case. You're trying to figure out, you know, is it bullish? Is it not bullish? What's going to happen if this happens, etc.? And a pullback to this nice little pocket. And if you just zoom in, this is log scale. You can see all-time highs right overhead. A pullback to this little pocket at around 90, 91, 92. That makes perfect sense as well. That would be nice confluence, touching with the primary trend line. Not sure we're going to get it, but nonetheless, that gives an argument that if this bearish divergence plays out, that's kind of at least this area where we might be going. And likewise, the daily chart, we've looked at this chart for ages ago. This would be a nice place for a retrace just to check the SR flip. So a pullback, lots of arguments for that with the price action. And this is the hourly. And this is pretty much essentially underscoring the battle at the moment between buyers and sellers. We broke up. Then we at the end of the weekend, and then we put in a higher high. Then we broke back down. Then we put in a little foundation at the bottom diagonal trend line. Now we're back out again. So the battle is raging as long as we're above 100K, you know, we're fine. But if you're looking for a line in the sand to invalidate any long setups you're looking at, because whilst Bitcoin is doing this, some altcoins, if Bitcoin dominance goes in the right direction, can be quite helpful. They can move because it's Bitcoin with a bullish posture, and if it's sitting above 100K, That's a bullish posture. So you could see some range activity from some alts. The alts that people are looking at to invest in typically will be the ones which are moving. The ones which haven't got much interest probably will just be bleeding a little bit at the moment. But yeah, so that's Bitcoin still not getting the signals we need. It's all over the place. Just need to wait and see. But 100K obviously is the line in the sand, and there's all-time highs just overhead. And you can see how close we are. Could very easily have done that in the early hours of this morning, but it didn't. And again, Bitcoin 15 minutes, nothing much to see off this chart other than we are ranging, right? We are just ranging all around the point of control. We had a foundation here, little foundation here, little foundation here. Technically, you know, creeping higher, right? Nice little diagonal support, but this is just, you know, difficult to trade for obvious reasons. But long trade ideal position would be if Bitcoin comes back down here from launch pad. But yeah, just ranging, nothing special. And again, Bitcoin dominance in terms of the money flow for the rest of the market. We did start to have a breakdown, which is really positive for altcoins. That's money flowing into the altcoin market faster than it is into the Bitcoins market. But we've had a bounce, which is expected. We just need to make sure we don't surpass this previous high and we get a confirmed break lower. But of course, this is the weekly, so everything's happening in slow motion. So you probably hear me talking about this the same way for the next 4 or 5 months until we finally get a breakdown. But hopefully it's not that slow. And again, if you're thinking of the altcoin market, you can see that on this chart, which is total 3 versus Bitcoin, Bitcoin is totally outpacing the rest of the market, and it's really, you know, still in the floor. But I have drawn this lovely little triangle, as I like to do, for you to trade off. So let's say you're thinking of entering a long-term altcoin position to benefit from maybe a move up here, which would be fantastic. That's a lot of money. You can wait for a breakout of this pattern, and then that could be your first bullish signal. Now, this is not talking about everyday trading. This is not talking about weekly trading. We can trade in this pattern. But then if we get a break lower, you'll know that it's probably short time, or maybe come back down to this level before we have a reversal. So nice, something little pattern to trade off. That's a little trick you can use, of course, if you're trying to figure out the direction of the market and you're looking for long-term investments. But if you are looking for more short-term trades, again, you can just trade within the pattern. And if you are looking for a long, we're approaching the bottom support here. So anything in this area might facilitate good long movement. So say, for example, I don't know, let's say you decide to enter into Dogecoin. Sure, you like Dogecoin. Okay, so you enter Dogecoin, right? And it's just at the bottom, comes back down a little bit, but then this is what happens. And then that could be your buy for your Dogecoin entry, and that could be your sell for your Dogecoin entry. Really straightforward. Just looking for signals in the money flow if you want some a little edge in trading at this point. But this is the chart I wanted to talk about. So this is the chart. So Bitcoin 1 week log scale, and this is the big picture we have. And guys, feel free to interject whenever. This is December 17. This is when Bitcoin really started to tell everyone it exists as it approached 20K. Everyone up until that point thought it was just worth a few dollars or a few hundred, but that's when it first noticed. And you'll notice then we had them retrace the bear market, and then in late 2018, it started finding its feet, and we moved up to this 100%, and then we came down. And then when we finally broke through the 100% fib level, all the way up to the 200, which of course was the top of the previous bull cycle, and then we retraced. Now, if this happens again, right? If we break above the 100% fib and we go all the way to 200, where is that? That's about 500, 400, 500K potentially on this chart. Now, the beautiful thing is we have already broken above the 100%. We are already here this cycle, and now we're retesting. So if you want some perspective on where we might be going, and if historical patterns repeat, this is where we could go. But is Bitcoin bigger now than it was then? Yes. So does that mean it can go up more or less? That means it can go up less because it's now bigger. It's not a speed bump anymore. It's an oil tanker, and that has limitations. So, but even if we just get up to here, this area just above the 1.618, that's 250, that's 300K, and those are the numbers we've been talking about. So big picture, that's kind of where we might be going in the cycle. I mean, any thoughts on that, guys?
Yeah, like one thing I just noticed there is that beautiful cup with handle formation there before it broke out. You see that? Really nice tight handle.
Yeah, in fact, we Yeah, I was looking at this inverse head and shoulders earlier. I was thinking it's a bit janky, but let's just see which pattern wins, shall we? Let's have a look.
Yeah.
Because we like our old cup and handles. I know Igor likes his cup. Always trying to please. Yeah, and that can serve as a handle. There you go. That's fine. So that's nice. That's pretty nice. You know.
Yeah. There we go. With the break. Yeah, with the breakout and then a retest, it's really textbook stuff there.
Yeah.
Right. It's just playing out really, really nicely.
Yeah, and again, not a prediction, but when we're trying to say you've invested in Bitcoin, right? What are you going to do? Where are you going to take profits? How are you going to know, right? You're going to try and direct message me. Well, I might not be available. So what are you going to do, right? You have to, whilst you're investing, whilst you're trading, you have to constantly keep checking in with these long-term charts, multiple perspectives to have an idea. And if you have all of your charts kind of pointing towards this kind of area, these sort of prices, and they all kind of line up as 250, 300 keeps appearing on different charts. And the reason, of course, why we're not talking 200% necessarily is because we just said Bitcoin is bigger now. We can't have the same kind of percentages increases as we have done previously. And this is a log scale chart, but that's the whole idea. And then you will start to say, okay, so I've got these 4 charts. They all kind of have a lot different lines in the sand, but in the same area. So the first line in the sand, I'll start taking profits from my position. The second line in the sand, I'll take some more out. And then that's an easy system you've got to lock in profits at the peak or approaching the peak of a bull run, as opposed to, well, Dave said, I got to hold it. I mean, that's not how you trade.
Yeah.
Well, Dave is a random guy who thinks he knows about crypto.
Even if Dave has a PhD, be careful. Yeah, you're right.
Unless that PhD is in Bitcoin tops. And then listen to him. But yeah, so that's essentially it. But let's just check in with my trade, because it's going well so far, but I just need my entrance and I'm just not getting it. It's been but we'll wait and see, hopefully. But that's essentially it, really. That's what's going on in the market at the moment. It is a bit of a waiting game. When Bitcoin is doing this, it can be a little bit frustrating for traders, because how do you trade this, right? What are we looking for, right? I mean, one line in the sand, 100K, right? And then all-time highs. But we're not touching all-time highs because that's when crazy stuff happens, right? So this is the only thing we've got to really look for any kind of confluence with altcoin action. So as an example, comes back down to 100K, I enter my long position, right? Whatever, right? So I've got an altcoin which has a bit more to retrace. So let's give an example. Maybe it's Floki. Floki needs a bit more to come back down, maybe to this area. And then Bitcoin facilitates that. This is the trade I enter, right? With confluence with 200 moving average. But if Bitcoin launches from here, my current trade will go. And that's the game, really. But yeah, interesting chart, food for thought.
Okay, I just entered a trade on the NASDAQ, so I just quickly want to show you that, if you don't mind.
Yep.
Okay, so it's basically just based off this 1 standard deviation VWAP. We've got that bullish candle on the 15-minute, half an hour, and the 1 hour time frame. So yeah, we got that bullish close, and now it broke that last candle's high as well. So that's the reason why I entered the trade, right? And this just below that, or the confluence here on, even though it's a 1 minute time frame, this is the pivot point. This is the pivot point, and it's also bouncing right off the 1 standard deviation. So there's a really nice confluence there. But I trade off the support resistance anyway, like whether it's just the horizontal support resistance levels, or whether it's support resistance levels coming off the VWAP. In other words, specifically the 1 standard deviation or the 2 standard deviation. In this particular case, it's the 1 standard deviation. But the bias is obviously bullish based on the longer time frames here, right? So we'll see if this trade works out. It's only a 1 minute time frame, so we could potentially get it. Elvis, good to see you. Pound US dollar often fake outs around major levels. How do you filter out false breakouts? Do you wait for a close beyond a level or use volume order flow confirmation? Yeah, The best way I know of to avoid false breakouts is to always wait for a retest after the breakout, right? So if you see prices breaking out, then you want it to come back to that breakout level. It will do that more often than you think it will, right? So don't try to trade the breakout. It's just dangerous because where's your risk going to be? Typically, if you just try to trade a breakout, you'll have trouble trying to figure out where exactly to place your stop loss, right? Because it's typically, in many cases, it's just like a straight line and breaks out. Where's your risk? When you trade a retest, if it comes back down and then starts to push back up in the direction of the breakout, then it's much easier to control your risk, right? Because your risk will be placed just below the level where it started to, or where it found support before it started to move back in the direction of the breakout. Okay, so the fake outs, they happen a lot, but the best way I know how to handle those again is just wait for a retest. It's much safer, and the probability for the trade to work out is often also a lot higher. You will avoid all the false breakouts, because if it breaks out and comes back for a retest and it just doesn't retest, in other words, it doesn't find support there and it just kind of collapses, then you've avoided that trade, right? You just don't take the trade. So you can avoid a lot of false breakouts just by waiting for a retest and then make sure it does find support at the retest level and then move away from it, right? I hope that answers your question. Igor, do you have anything to add to that?
Yes, I can add, but the first part you really said very, very good, because usually we'll see the retest. Let me just give one example just for today, and we just talked about that a few minutes ago. I will just show you right now on the chart just to see. Okay, and for example, today we got resistance. Resistance was 1.336. As you can see, we touched the resistance here, and then we got one bearish candle on the 30 minutes. We started to go down almost 45 minutes. We went down around, I think, 15, 16 pips. And then we went to the same spot and we started to go up to 1.34. So every single day when we have that, we will usually have some kind of retest. But there is another problem. Actually, it's a problem for me very often related to these fake breakouts. And I will just show you on my 30-minute chart just one example to see how that can be very, very problematic. Actually, last Monday, we reached 1.314, for example, level. It was a really low level here. And after that, the market started just to go up. I didn't catch that trend because I didn't believe that we will go just again to the upside. So the price started to go up, and you can see on my chart that I drew a trend line on relative strength index indicator. Look at this. So what is usually my strategy to avoid these false breakouts? I don't like to go, to buy from the resistance or to sell on support just because of my risk reward ratio and just because that really can be a fake breakout. However, what I can do, for example, I'm on the top here and I maybe wants to see the price drop instead to go higher, then can be volume analysis very good in futures. Because if I see that volume decrease, that volume doesn't increase after that, just decrease. And if I see there's no momentum and it's a weaker and weaker, maybe I can create one counter trend trade. Maybe I can enter into the trade and try to do something. But the problem is when we have something like this, you see, for example, on 30-minute chart, a long trend line that I can draw. The problem is that usually this is the period of the choppy price. So price can be really choppy. Look just this chart here. from the May 15 to May 16, for example. This is crazy. A lot of traders can create a bad trades just because you have a lot of false breakouts, etc. So that can be really, really tricky. It's not the rocket science. It's not the science that I really know something when I see. Sometimes I enter into the trade and that trade is a losing trade. So I like to find a setup, but I cannot get from the market always the beautiful setup. Sometimes we try, sometimes not. But if, like Paul said, if you watch multiple chart time frames, watch a volume, watch a momentum, watch the relative strength index, stochastic or MACD, something just to figure out the momentum. Watch 4-hour chart to get a bigger picture. Watch a lot of things and try to think and concentrate and be patient to catch the nice level. I'm sure that you will have much better accuracy and better trades. Sorry for this long explanation.
No, I nearly gave you a hand of applause, but yeah, that's a good addition. Yeah, exactly. So hopefully that answers your question, Elvis. Yeah, so let's go back to that trade. I just want to see how it plays out, if you don't mind. So,
of course.
Also for the viewers, if you are trading futures, and you that will be obviously useful to you, I hope. So we've just been trading to the side a little bit, but it's clearly holding that support level coming up that pivot point. The pivot point you can also be seen on, I've got them drawn on all the time frames, so you can see that very clearly on the 15-minute, the half an hour, and the 1 hour. But that very clear push on all three time frames. Remember, if you scalp, you don't. I only take 100 ticks. The 100 ticks is the equivalent of 25 points. That's my take profit, and then my stop loss is 80 ticks. So that's 20 points, right? So a 20-point stop loss with a 25-point take profit. So it's pretty tight. And what I'll do is, typically when price gets very close to the take profit or 60-70%, then I'll reduce my stop loss. And that is just over a series of trades. Then, my stop loss is not, or the stop loss or the risk reward ratio is not a 1 to 1.2. In many cases, it's bigger, right? Because I've reduced my stop loss. Oh, Robert, you've been doing 100 tick take profit and 50 stop loss. Yeah, it's a bit too tight, right? You need to give yourself a little bit more room. Just, because it doesn't just, it's going to do this. These wicks, and even if you enter here, it can just pierce through below that candle and then push back up. You see what I mean? So just a little bit of room, may make a difference for you. Maybe you should, you switch to 75 take profit and 50 stop loss. Yeah, the 50 is still too tight. They're it's too, give yourself a little bit more room. If it works for you, then that's fine. But 80 for me is it can break the low of the candle where I actually base my decision off, and I still won't be stopped out, because it just give it a little bit of room. Does that make sense? Maybe I should try 100 take profit. Yeah, that's what I do. Try it for the next 20 trades.
Look, there's a bit of an art form, really, isn't it, with stop losses and take profits? And I think it's a different market. If you take a tip from the crypto market, stop losses should always be placed based on TA. They should be based on the barriers between the price action and where you don't want it to go, right? And obviously you've got to make sure the risk reward is appropriate, but that would mean that essentially it is flexible from trade to trade. And that's the whole game. So sometimes I don't even pay attention to the percentage decline really of my stop loss. It just has to be in the right place, and it should be considered the safety net, right? As opposed to, most of the time I get out of my trades without, if it goes wrong, most of the time I get out of my trades without any any loss, because it's set up in a way that it would take a black swan event to hit the stop loss typically, or something really bad to hit the stop loss. And then if my trade invalidates, I will then look to exit at minimal to no loss without my stop loss being hit. But that has to be the negotiation. If I was like rigid 5% decline or whatever every trade, I'm going to get stopped out left, right, and center, which is exactly what happened when I was learning to trade when I began with. So there's a couple of ways you can do it for sure. Checking previous volatility, and I think follow Jannie's guidance a bit more because it's more appropriate to the market you're trading. But just TA should be dictating it, really.
Yeah, look. I mean, that is scalping is obviously very, very different if you focus on the 1 minute time frame. So in scalping, your entry is crucial. Like your entry point is the most important thing. Okay, and your entry point is based on technical analysis, right? So with that, you have your bias that comes from longer time frames. But all I'm saying is, like, even when your entry is spot on, because it's the 1 minute time frame, it can still kind of just go a little bit lower and then eventually go into your favor. So it's very different. But I agree with you, like on the longer time frames, yeah, for sure, right? That's very different. You approach that very differently. But in scalping, the whole idea is to be in and out of a trade very quickly. So your entry is everything, and your entry is based off technical analysis again.
Yeah.
Right. So if the technical analysis fail, then this is the 1 minute time frame. But if this was the daily time frame, right, you're gonna spend there's a lot more time to look at the charts and draw angles and levels.
I mean, that's the case of when I'm like leveraging it up, doing little short-term trades, then yeah, it's a tighter stop for sure. But speaking of entry points, my entry will always be dictated by if I can get my stop where I want it, and then it's a no trade if I can't. So it's multifaceted, I suppose. But just I can't remember the guy who said it, but it is an art form. But if you're getting stopped out all the time, especially if a trade is playing out, there's a problem that needs to be addressed. For sure, yeah, that I fully agree with. We are probably going to take profit any minute now. Andre, nice to see you. Igor, you've got a question there. Igor passing below. I don't think Igor is a market. Igor, if you personally move below 1.3347, could you fall further? Could you fall any further, Igor? Can you?
Always go higher or lower. So,
all right. So why don't you can maybe just.
But I just saw something very interesting. So if you go to the futures market and even use any volume indicator, you will see that volume is holding. So I really watch very often this similar situation. I don't know where will be the point. We have several so we can say several interesting price levels. One is this 1.3347, because on that price level, we it was the low after we testing 336 in the Euro session. Then we have 1.332 area, where is a simple moving average 50 on 1 hour chart for British pound dollar, which should be area of bullish bearish invalidation point for today. So I don't know where the market will react, but somewhere will react and we will back to the upside in 60-70% by my experience. Of course, if we start to go down, this is something that we cannot predict. But what I want to see right now is, and I question myself, why the volume, positive bullish volume, is so strong, and we're going down. So this is some kind of manipulation. Something happened in the market, and I just want to see what will happen here.
Yeah, I personally think, if I may add to it, as I said previously, usually when you've reached your daily ATR, it's not, even if you do come back to a level that looks like it's promising to go back up, because it's already so far extended for the day. In my experience, it's usually best just to wait for the next day in the London session and then look for an opportunity on a new day, because now you had the breakout and you had the retest, and now you want to make sure the price is pushing back up, and that would make for usually for a better opportunity. Okay, but today we've had a 140 pip move, and we like that support level where it pulled back to. That's a 100 pip move right from the bottom to the low. So you still extend it. I'm not sure if that makes sense. You still too extended for the day.
Yes.
So it just makes sense to wait for the next. But I mean, it all depends on tomorrow morning. If it looks like it's going up, and that could be anything. It could be like a sideways consolidation and a breakout. It could be a double bottom. It could be anything. It could be a very strong engulfing candle coming off there. Anything in the book, right? Like if it lines up with the premise, obviously is that 1336 breakout level coming back to that reset. It needs to bounce up there, but not today. I don't think.
Yes,
that's my 1 cent.
It's really excellent thing, because you are absolutely right about that. We already accomplished that. The only thing when I'm just entering, it was the Tuesday, Wednesday, Thursday, I would do the same like you. But Monday is the like opening range. And what's happened very often, if you remember last Monday, we went to the 1.314, and price started to increase in the second part of the US session. And we were already on 1.3215, which was 80 pips far away from the low, and market prepared for the bullish sentiment, and whole week after that was bullish. So this is why sometimes I want during the Monday open to find some good level and to enjoy. The beautiful thing with what happened, it was if I was smart to enter just before the Frankfurt open, but I could not predict the market. That level was so good because I could enter in that level and hold whole week, because it was a really, really low. And right now we are so good levels. So Jannie's, yes, I think that Jannie and me right now are like a philosophers. So great philosophers. And But I think the trading is sometimes like philosophy. It's a master of thinking, and like chess gaming. Sometimes we need to create some good move and create a good preparation for the next. And this is the very hard. But I think that me and Jannie will succeed in that for British pound dollar this week.
Yes. And Paul. Even though he doesn't trade it, he will also succeed somehow.
No, I'm going to trade Igor coin.
Hi, Lola. Nice to see you. Paul, you have a question there. Paul, Lola's asking if you could please share some insights about Theta.
Yes.
Yeah. I'm invested in Theta. So let's have a look.
Theta.
Theta, potato.
Have faith. Have faith.
Have faith. Have faith in faith. Right. Good to see you, Lola. So this is okay. Let's do it properly. Let's just zoom out for a minute. Okay, where are we? So we're on the floor. Not far from the floor. So big picture. So obviously for a long, this is kind of where we want to be, and we're just looking for an entrance. The RSI isn't proving particularly helpful at the moment. It's messing around with this line. But we have a golden cross incoming, and we're just approaching the golden zone. And then we have this lower support. So you got a couple of options. Really straightforward. You can, look, if Bitcoin was where you wanted it to be now, then you could maybe start entering at the moment. But you have to, as we've talked about, you have to presume Bitcoin may be coming back down into this area, just like these other people are thinking. So with Theta, this diagonal line, that's obviously the best place to come in. And it's not that far off. The issue is, of course, you've got this lovely golden zone. So if you think Bitcoin's going to come down a little bit, your first entrance could be on the 618. And then if you get a wick down here, you can come in again. Really straightforward. And just a tour, and then just try and scoop it up, right? Then you've got a definitive line in the sand to trade off. And if you lose it, the reason I really like ascending support diagonal lines, lower diagonal lines, because what happens is when you get a breakout, a breakdown to the upside. So say I enter here, then I enter again here, and the price action comes down, but then it dips lower. The great thing about the bearish retest is with the ascending diagonal line is when it comes back up to check it, you typically are at a higher price point than your lowest entrance, which helps the situation completely. And also because, you know, we've got this kind of area where you would expect a bit of a tussle with, your first entrance is likely to get a break-even escape as well if need be. But if that worries you, don't worry, because just underneath there's support, right? And we've only tapped it once, which means if the trade does invalidate and Bitcoin comes down lower, then you're going to get buyers coming in here and you're going to get a bounce at the very least where you can get out where you got in. So it's a pretty manageable trade with terms of risk. It's just a case of keep your eye on Bitcoin, see what it's doing. And you might say, okay, next time we're approaching 100K, I'm going to enter my first position. If it's here or here, and then take it from there. But just caution here, but you know, high, moving around, nice little entrance. Yeah, it's tradable. Nice little long trade, lots of different options. So I hope that helps. Any thoughts, guys?
Hi. Yeah, I like the golden zone. I would definitely pay attention to the golden zone. I don't like, obviously, like you mentioned, it can come lower, and that would be great. But because we had such a strong breakout there, I think that support level for me personally would make more sense. That's all.
Yeah, and if you're worried about the market catching you out and going in the wrong direction, then this is probably the worst case scenario, right? And you can get out, right? I mean, we're not really in a position where we're going to see Theta do this at the moment, right? We're not getting those vibes. So worst case scenario, you maybe have to wait a couple of days, but obviously it depends where your stop loss is, which we've just been talking about. But yeah, this gives you quite a few options to put your stop in quite a nice place. But yeah, there you go.
The NASDAQ trade took profit. That's all. I was just going to say, do you want to see it? Do you want me to prove it to you? Fine, I'll do it. No problem. There you go. There it is. It went to there. You can see the exit. So that's the entry box. That's the when you take profit, it just closes to the left hand side. So that was the profit. 1 to 1.2. Yeah. So on scalping, your success rate is typically also not as high. It was still decent. You know, for me, it's about around 65%, something like that. So I don't think that's too bad. But anyway, that's the trade. It worked out. Any questions on that? No, thought not.
I mean, do people want to see proof that I haven't yet entered my trade? I'm going to show you. Let's just do this. This is important. Let's just stare at the chart for a minute. Yep. Still not there. Still waiting. I mean, can we encourage it? I mean,
yeah, we can cheerleaders. Put your pom poms on. Yeah.
Come on. Yeah. So yeah, nothing happening. There you go.
Yes.
What about XRP? I don't know why I always ask. I don't know why I always.
Why are you just calling? Is it the only thing you can think of?
No. Oh, a Sol. What's the other one?
Right, XRP. That short trade, which you thought was a long, played out. All right. So let's take a look at it. Let's just take a look, because that messed with my brain on Friday. Let's just see if I can find it. Yeah. So I can't remember where we were on Friday. So yeah, we were. I don't know what was this. I can't remember what we were doing, but I think we were talking about this is where we want to short from, and I think we've come back down here. Yeah, and this was where we want to take profit. So I haven't traded this, but yeah, the short play taken is coming down, and we'll probably hit this as well. So that would have been if you came in at the top, and you did have a nice little entry, a little bit of 10%. But you got to be cautious, of course, because if you did short this based on what we were talking about on Friday, you know, you should probably be considering taking profits soon because you're running straight into an order block. But yeah, just that worked out. That was all right. Yeah, that's what XRP is doing.
Lola, have you got anything else on your watch list? Paul is right here. He's here for another 10 minutes.
I don't know. Yeah, Lola, Lola, what's on your watch list, right? Or are you just waiting for top altcoin picks tomorrow to flesh that out? Let's see what she says. I'm sure she's got a
so
great.
You assuming maybe I don't know where Lola is from. It could be a male name, Lola. I don't know. Because like Jannie, you know, people go, oh, that's definitely a woman. Like,
I'm going
not a
to
woman.
commit to female here. I think.
Yeah,
If Lola, if I'm wrong, tell me. Absolute respect.
Carlets. All right. Oh, Igor's looking for something for us. What are you looking for, Igor?
Yes, I just want to create a scenario for the next, for the up to the UK Open. So I just need to have that scenario just to know how to react and what to do. So I will just share for everyone to see my thinking process related to that. So the first thing what I will do, I will add on the chart the simple moving average 50. I'm putting that because a simple moving average 50 on the 1 hour chart on the Forex market usually can be as some kind of the support or a bullish bearish invalidation point. Of course, in the same time, I will add Fibonacci retracement. I hope that you see my chart. Yes. I will add my Fibonacci retracement here. Just Fibonacci retracement to put it maybe from, I think, let me put from this level to this level here, like this. Yes. So as you can see, we already touched, maybe this low should be the Monday's low, which is, I think, 2 candles up. It's not like a science to push where we want to be. It's good to put a Friday's low, but we can put the Monday's low. So if we use a Monday's low, we already touch on the 48.2% Fibonacci level. If we watch just this, we can see that this simple moving average 50 is like holding this. You see 1, 2, 3, 4, and then this several strong bullish candles. So I can say that this simple moving average 50 for today only can be a bullish bearish invalidation point for me. And if I see that price holds about simple moving average 50, I can say that we are bullish. So this is my bullish bearish invalidation point. And if someone's want to enter a swing trade, I would enter a swing trade just below my stop loss, be just below this simple moving average. For example, my stop loss can be 1.331 or something like that. And then to catch some big levels, because we can reach really, really new highs. But this is my scenario for the trade and for British pound dollar. And I'm watching this setup, this bullish sentiment right now. And I really don't know how much will go down. So one scenario that I think that's most possible is that we already touched this 38.2 and will go up. Another is to touch a 50%, and another is to really go deep to the 61.8%, touch the simple moving average on a 1 hour chart, and then go up. So these are scenarios that I see, and the last of them is, which is the statistically lower, is that we break and start to go down just because the market wants to go down. But this is the way. It's very crucial right now just to know where to put the stop loss, because if we do not put a stop loss in the right position, any trade can be dangerous trade, because British pound dollar knows to be very volatile sometimes, especially during the UK opening range, Frankfurt opening range, US opening range, and this is why I monitor this. But the interesting thing is that right now we're going a little bit lower, and I don't know what will be to the end of this day. But I will
Yeah,
watch.
do you mind me just because those are really good points. I just also want to add to, in addition to everything you've said.
Yes, please. Yes, please. I would like to see your point of view. Please.
So if you don't mind, just stop sharing your screen, please, just to okay. Is this the right? Yeah, it's the right one. So for me right now is this level, as I pointed out at the beginning of the session, this higher low of this downward slope, right, with the head and shoulders and so on, that downward slope, we want to get that broken, and then we wanted to retest it. Okay, is it retesting at the moment? Well, at the beginning of the session we were, right, as we pointed out, but as I said, it's typically not. For me, I mean, it could have gone up. I'm not saying anything more than that, right? But because of the daily ATR answer. Now, based on where we are right now on the 4 hour, I would not personally be interested in any a pullback area. Like this needs to close back up above that, okay? Because this is now again resistance. This is again resistance. So it needs to trade back up. And if you identify a Fibonacci retracement level and it bounces up there, then yeah, you can get a much better entry for sure. But then at the same time, you are assuming that it is going to come back up here, right? And that is a resistance zone right now. So for me personally, I want price to close, and this is not going to happen today, I don't think. Maybe, I don't know. But I would like to see a close above this resistance level again. Okay, so and that would give me a lot more confidence that we go into trade higher. But right now, this is I'm not sure if you're still watching Elvis, right? This would typically be, this is a false breakout.
I think he's left the building.
He's left the building, Elvis.
Yes. Elvis left the building. Yes.
He's a busy guy. But yeah, right now I think this is like a classic kind of almost like a false breakout. But it's too soon to call it a false breakout. But definitely, like if you were looking to enter this trade, it was just too risky even after it closed above there, because the market. This was the opening candle, right? This was the first 4 hours of the pound US dollar, and then obviously the next candle was a bit of an inside candle, and then we had that push higher. So from the low here when it opened right to when it broke out there, it's past your daily ATR, right? So as I said to you, like, can you trade it? Well, yes and no, right? No, more no than yes, because the probability is not very high for that to just to continue. It needs to come back first, and now we are there. But we'll see what happens tomorrow morning. There's another half an hour left before this 4 hour candle will close, and then we've got the next 4 hour, which is the last 4 hour candle, and then we'll see how the Asian session candles form. If it pushes back up here, and we look at it tomorrow morning, then yeah, for sure, I'm long, right? But right now, we're dipping below that. So it's just a little bit of caution for me. That's all. Yeah. Would you agree with that, Igor?
Of course. Right now, we need to be cautious because there are 2.5 hours passed after the US session, and we didn't try to go up. So there's no bullish hourly candles closed, nothing. We don't have momentum, bullish momentum. Only thing that the difference from the May 6th is that volume that's holding to be bullish, which means that something will happen, some bullish push we will have, but we don't know when. And we need to be patient for that and wait and to see and to re-enter into the best price level.
Yeah, I agree. What's your take on this, Paul?
Well, we've got the high.
You sound like me on Friday now.
What? It's not Friday? What?
Sorry.
I got. Yeah, I mean, if you drag the if you that top diagonal line, if you drag it a little bit to the right, just extend it to the right, you'll see where the price is currently sitting.
Probably, just have to. Sorry,
Retest that, yes.
I'm gonna have to do that again. Okay, so basically from there to there.
Yeah.
So it could it form a support level here. Is that what you're saying?
Yeah, I mean, it's just one point. You need more, obviously, but yeah.
Yeah, I agree with that. Like if we can get a bounce of that diagonal line, then just for additional, you can trade it off there. If you're really confident about your bias, but if you want to be a little bit more cautious, then you want that bounce off there and a close above there, above there, like right, and then you've got that would be for me the ultimate confluence, because then you've got a lot of stuff. It's not just these two things we just spoke about. It's everything that happened before that, right? And that is the higher low. And this inverted head and shoulders pattern, and on the longer time frames, you closed bullish on the weekly time frame, and also the fact that we haven't really moved much in terms of the monthly ATR, and so the fact that there's still potentially, if this does take off, like if it can break above here, so like Paul just mentioned, it could bounce off here. If we get it above there, I think we're definitely going to break those highs. Definitely, yes. I need to get rid of that word definitely. The probability is very high.
Yeah. Well, is that an Oasis album? Definitely, maybe.
Definitely, maybe. definitely, maybe, perhaps, maybe even not. How's that? Yeah.
That's right.
You know, too much is never enough. Like all that kind of stuff. What are you doing?
Yeah. So that's the pound US dollar. I'm not sure who's following that. Robert, you recently got into the pound US dollar, so maybe you're watching that as well. But that's definitely something. I'm definitely interested in the pound US dollar going long. But it all depends on how tomorrow morning looks. It all depends on tomorrow morning. So, but if we get this sideways, like the sideways consolidation and a breakout, something like that, that's something you can leave it open compared to other times when you get that sideways consolidation and a breakout and you want to leave it for longer for open, but you don't have confluences on anything else. You're right. You're still in a range on the longer time frames, or the probability is still high for it to either go up or down. That's when you may get a little breakout and it's going to reverse against you. Anyway, having said all of that, very covering the pound US dollar quite extensively, we have sadly come to an end. So for everybody watching, that's Andre, Robert, Lola, and everybody else, Elvis, everybody else watching, thanks for watching. Igor and Paul, always great to see you guys. Have a great evening. I'll see you guys soon. From us, it's good night. And the next session will start in half an hour from now. So cheers for now.
Bye-bye, guys. See you.
Yeah.
Cheers.